Testing, 1, 2. Testing, 1, 2, 1, 2. Testing, 1, 2. Check, check, 2, 2. 1, 1, 2. Testing, check, 2, 2. Testing on 2, check, check, 2, 2. 1, 1, 2. Testing, 2.
Check, check mic, check. Check mic, check. Check, check mic. Ladies and gentlemen, good morning. Welcome to the Digital and Technology Week 2023. Check mic, check. Check. Check mic, check, check, check. Check, check. Check mic, check. This is a Digital and Technology Week 2023. We're going to be here for the next 3 days. Soon enough, we're going to get a security brief about this venue. We do thank our organizers for this interesting layout. We have a number of exhibitors. And as we go along, we'll be getting to interact with them and see what they do have to offer. You can see Samsung is there on the back. We have Cisco Securities, Reddington, other exhibitors as well. Nikirudi hapo itakuwa. Okay. So, how far can I go? So, hapa tu. Huko ni sawa. Okay, sawa. So I'll ask you to rise up for the national anthem. Yeah? You want to play it? Okay. Let's all rise up for the national anthem.
O God of all creation, blessed is the Lord God nation. Justice the ocean and defender. May we live in unity, peace and liberty. Plenty be found within our borders. Let one and all arise. Bring up the strong and true. Service give our honest endeavor. And the homeland of Kenya, heritage of splendor. From where we stand to defend.
Sana to
Let
Digital
all
and
with
Technology
one
2023. This is the 8th edition of the Trends and Research in Matters Digital and Technology. So to all the technology enthusiasts, this is where you need to be. A quick mention of our sponsors and partners, beginning with the Ministry of Information, Communication and the Digital Economy, the Association of Fintechs in Kenya, Citizen Digital, the Institute of Human Resource Management Kenya, Samsung, Cisco, Reddington, the Kenya Institute of Bankers, and Go Gaga Experiential. Yeah. So yes, for 3 days we'll be here, but remember that later this week, there's a lot more coming. The icing on the cake on Friday, the 8th of December, 2023, at this, not at this same venue. We'll be having the Digital Media Awards, a culmination of the digital. Yeah, I think we're good. We're good, yeah. So for the very first panel, yes, for the very first panel today, we're going to have a very interesting conversation to be moderated by Ali Hussein, the chairperson, FinTech Association of Kenya. Do stand by for this. He'll be having on stage a very powerful panel to discuss matters FinTech and how they can survive in tough economic times. After that, we're going to have another session to be moderated by Carol Kendi. There's a Chief Marketing Officer, Absa Bank. She'll have a separate panel. We'll have a short break in between, a coffee break for about 30 minutes. Do stand by for that. Later in the afternoon, Evelyn Gashoki of Wawera Gashoki and Partners Advocates. She is a managing partner there. We'll be having another conversation on matters legal. So as promised, we do have a jam-packed session for the next 3 days. You need to stand by. And you can also invite those who are digital and technology enthusiasts just like you who may be willing to join us. And yes, they can register through the Digital and Technology website. That's digitalandtechnology.com. Okay, we'll give you the proper details for that. Meanwhile, you can continue interacting with us on social media. Digital, the hashtag to use is Digital and Technology Week on all social media handles, social media channels. That's Instagram, X, formerly Twitter. We're also on Facebook and on TikTok. Are we on TikTok? No. We should be on TikTok very soon. Yes. Huh? Aha. We are on X, LinkedIn, Instagram, and Facebook. TikTok is coming. By next week, we should be on TikTok, I think. Hopefully. Yes, remember that even as we go along with these interactive sessions, the panels on stage, you can interact with us. And you'll be given an opportunity to even ask questions to the panelists on stage and also share your own experiences. So yes, it's not just about listening. We'd also want to hear your own experiences on these issues that we'll be discussing. So do stand by for this as well. Wageni wetu waheshimiwa, karibuni. Hapa ni Nairobi Street Kitchen, na hii ni Digital and Technology Week, the 8th edition, the 2023 edition. We're just about to start in a very short time. In about 20 minutes or so, we should be kicking off. And you can see already our guests are arriving. And so, tuko tayari. Wapiga picha karibuni pia.
Mic check. Mic check 1 2.
Check 1 2. Check 1 2. Unasikiaje? Unasikiaje? Nipata? Nipata? Hapo. Nipata? 1 2. Check. One, two. Hapo iko sawa. 1 2. Check 1 2. Iko clear? Iko sawa.
Mic check. Naipata. Mic check 1 2. Naipata. Mic check. Testing 1 2. Testing. One, two. Sikia kwa kuna.
Check 1 2.
2.
Nasikia ikiwa clear. Right. Check. Check 1 2. Umepotea. Unasikia?
Testing. Yeah, sasa iko. Testing 1 2. 1 2.
Utakuwa unacheza nini? Anthem.
Testing. 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 Two.
Nimetoa microphone kwa house tusikie sauti unanirudishia. Ukitoa itapotea.
Two.
One kwa vmix. Hebu mute vmix. Bado iko. Ukiongea utasikia sauti yangu imepotea kwa speaker. Ukiongea ukimute utasikia sauti yangu imepotea kwa speaker.
Testing. Two.
1 2.
Nitakuwa nachukua sauti yake. Check. Leonard. Leonard. Leonard Mayo. Mayo. M-E. M-E-Y-O. M-E-Y-O. M-E. Y-O. M-E-Y-O. Yeah, Leonard. John. Wanyonyi.
Mic check 1 2. Mic check 1 2. Mic check 1 2.
check one. Check. Check. Check.
Test, test. Test 1, 2, 3.
Like testing 1, 2.
Good morning. Ladies and gentlemen, good morning. Karibuni sana. I'd like to request that you all converge at this sitting area here. So those at the restaurant and others elsewhere, kindly converge here so that we may kickstart events of the day. Karibuni sana. Naelewa. Ladies and gentlemen, once again, karibuni sana to the Digital and Technology Week 2023. Karibuni sana. Let's converge at this sitting area here so that we can kickstart the events of the day. We are just a little bit late, just a little bit, but I'm sure we'll manage to catch up with time. My name is Fred Indemuli. I'll be your MC for the day. And even as we wait for other people to congregate, a quick run through of this place. And as far as security is concerned, we have a number of emergency exits on both ends of this floor. Towards my left, if you can see where I'm pointing at, there's one emergency exit at that extreme corner. Behind the bar, on my right, there's a second emergency exit. And of course, there's the main entrance that you use to access this floor. That too can be used for your exit. In case of emergency, there's a fire assembly point behind this podium on the ground. So you can use either exits and find your way to that position. That is as far as the exit points are concerned. There are a number of washrooms or sanitary facilities for your use on this floor. They are located on either ends of this floor. One is on my left, and it's correctly labeled, gents, ladies, and another one for those with some disabilities. Another one, just like that one, is located behind this bar, and you'll find the washroom and sanitary facility for your use. The other thing I'd like to point out is that throughout this session, we'll continue serving refreshments. There are 2 water stations. If at all you're seated at this main sitting area, on either side, on your left and right, there are 2 water stations. Feel free to get water from there. And we'll also continue enjoying refreshments from the restaurant throughout this session. Because of time, we may not be able to take a break for coffee in between the sessions, but now that you've already started enjoying the refreshments, you'll continue doing so. Karibuni sana once again, and yes, please, let's converge so that we can now start in earnest. I'd like those already seated here, if at all you could move forward so that we can have a better arrangement. My colleagues and friends from the media, karibuni sana. I can see a battery of journalists and camera crews, karibuni sana. This is also your event. Good to see you here. This is the Digital and Technology Week 2023. We are all here to find out 1 or 2 things that may help us in our different fields and sectors. We'd want to start off with the national anthem, but for this, I'd need everyone to be their rightful place. So those who are still moving, please, let's find a place to sit. Meanwhile, those will be taking us through the very first discussion, the very first panel. I hope everyone is here and ready for that conversation. Okay, so ladies and gentlemen, let's all be upstanding for the national anthem. take your seats. Thank you very much. I know that was a good opportunity for you to sing the second and third verses of our very nice national anthem. Once again, karibuni sana. Our partners and event organizers, industry players, digital and technology enthusiasts, ladies and gentlemen, hamjambo. Hamjambo tena. I know it's a chilly morning and it's December. Sasa mambo ni kuserereka hadi mwisho. Ni sherehe, sherehe after sherehe. So I know many of you may have been up to some sherehe over the weekend. That's probably why we are a little bit late. But as I said, we'll try and catch up with time. So ladies and gentlemen, welcome to the Digital and Technology Week 2023. This is the 8th edition of this event. DTW, that's a short for Digital and Technology Week, is a leading digital and technology platform in Africa, providing the very best in industry insights, exploring emerging trends and research, and is also a perfect launchpad for your product or brand. There's a takeaway, there's a take-home. Now, over the next 3 days, over 800 corporates, agencies, including government, as well as media and technology companies, both local and international, will converge at this venue to explore emerging trends and research in the fields of digital and technology. Starting this morning all the way to Wednesday evening, we're going to have the very best of industry greats on this stage, sharing their experiences and in very interactive conversations that you should and can be part of. So get ready to share, learn, and of course, be mesmerized to some extent. And as if that is not enough, this Friday, this same week, on the evening of 8th December, we shall have the award ceremony celebrating the 7th edition of the Digital Media Awards. I know you've seen DMA somewhere. Yes, that corner, Digital Media Awards, coming up later this week as a culmination of the Digital and Technology Week as well. Now, Digital Media Awards is a leading award recognition platform celebrating the very best of digital marketing and technology advancement in East Africa. The annual awards recognize brands, agencies, and individuals who have delivered unique and original projects in the previous year, from new approaches to digital to impactful campaigns, and these projects that definitely inspire us all. So if you're yet to be part of DTW or DMA, ask your neighbor about their experiences before. I've seen some familiar faces that were here in 2021 when we held this event somewhere in Karen. Last year, again, somewhere in Westlands, we held this event, and some of the faces are still here. So you're definitely in for one of the best weeks of your life. Ladies and gentlemen, allow me to briefly recognize our sponsors and partners who have gone an extra mile, committed their resources, blood, and sweat to ensure that this event is possible. And I will start off with the Ministry of Information, Communications, and Digital Economy, which has the responsibility for formulating, administering, managing, and developing the information, broadcasting, and communication policy. A round of applause for the Ministry of Information. Allow me to recognize as well Association of Fintechs in Kenya, AFIK, AFIC, whose main objective is to spearhead and advocate for digital innovation as a core strategy for efficiency, scalability, and competitive positioning within Kenya's financial sector. Citizen Digital, the leading digital and breaking news app in Kenya. The Institute of Human Resource Management Kenya, IHRM, whose mission is to promote and regulate the practice of human resource professionals. Samsung, electronic and smart appliance technology provider. They are also part of the exhibitors right behind you, behind the journalists. Samsung is present there, and you may get to interact with whatever technology they're displaying today or exhibiting. Other partners and sponsors include Cisco, an American-based multinational digital communications technology conglomerate, Reddington, technology solutions provider, Kenya Institute of Bankers, whose main job is to produce well-trained human power for the banking and financial sector, and of course, the geniuses behind the conceptualization, organization, and meticulous planning of this event, Go Gaga Experiential. A round of applause for all our sponsors and partners. So, ladies and gentlemen, we're about to get into the main agenda of the day. Remember, you can continue interacting with us through our social media handles, and I'll be giving you our handles shortly. Do stand by for that, so that I get the social media pages correctly. Just a moment. On X, formerly Twitter, the handle is at SMW Nairobi. That's Social Media Week. At SMW Nairobi on X. On LinkedIn, Digital and Technology Week. On Instagram, digital_and_technology_week. And on Facebook, Digital and Technology Week. And you can continue using the hashtag Digital and Technology Week on all these social media pages. So, ladies and gentlemen, inaitwa kufanyaje kwa kilugha yenu? Rubbing your palms, just to generate some heat. Let's all do this. Kidogo tu. I know it's very chilly. It is very chilly. It's a bit chilly. We now want to welcome the moderator for our very first discussion this morning. The discussion this morning to kickstart the Digital and Technology Week will be on fintech pioneers and challenges, a discussion on how economic downtimes build resilient fintechs. A very apt discussion during the times we're in right now. Yes? So it's something you want to interact with. And beyond interacting with us on social media, whatever session we're going to be having on stage is going to be interactive as well. So the moderators are going probably to give you, as our audience, some opportunity to also ask questions or to make a contribution, but that is up to them. So I'd like to introduce Ali Hussein, Fintech Association of Kenya chairperson. Ali Hussein, karibu on stage. A round of applause for Ali Hussein. Another round of applause for Ali Hussein. Karibu sana. Now, Ali Hussein is a serial entrepreneur, regular commentator, and contributor on all things tech and the policy and regulatory landscape that straddles this sector across Africa, and Africa in particular, and the world in general. What keeps him busy full-time these days is consulting on digital transformation, working on his fintech startup, podcast and vodcast, hashtag Ali Talks Tech. Yeah? Ali has served and still serves on several boards, both in the private and public sectors. He also gets great satisfaction by mentoring and investing in tech entrepreneurs across Africa. Another round of applause for Ali Hussein. So Ali Hussein will be taking us through this discussion on fintech pioneers and challenges, a discussion on how economic downtimes build resilient fintechs. And so Ali, over to you. You'll invite your panelists and then proceed on with the conversation.
Thank you. I hope I can be heard. Yes, I can hear myself. So let me bring to the stage my good friend Leon Kiptum. Leon is Senior Vice President East Africa at Flutterwave. For those who may not know Flutterwave, one of the leading fintechs in Africa. And Daniel Kiruingi. Daniel is Chief Operating Officer at SasaPay. Daniel, karibu. SasaPay is one of the youngest fintechs in Kenya, and you will be hearing quite a lot about SasaPay. Now, on a light note, we tried very hard not to make this into a manual, but unfortunately, we were not successful. So don't blame me, blame Rita. Rita, I've thrown that ball to you. So, guys, today morning, really we want to have a conversation around fintech pioneers and challenges, and to discuss how to build resilient fintechs in these economic downtimes. One of the things I always like to say is that during tough times is when great brands are actually built. I always also like to start my panels with a brief introduction from my panelists and their opening statements. So let's start with Leon on my left side. Leon, introduction about yourself and your opening statements on this interesting subject.
All right, thank you. I don't know whether it's clear, but I think I can hear myself as well, Ali. So thank you very much, Ali. And
Maybe you just check whether your thing is on.
is it? Can you hear me? I can hear myself.
Yeah.
Yeah. Okay. Thank you, Ali. As said, my name is Leon Kintu. I am a business leader in the fintech world. I have been in this space for quite a number of years now. Currently, as Senior Vice President for Enterprise Sales in East Africa, so leading that piece of the business, as well as setting up the different markets of East Africa. That's Kenya, Rwanda, Tanzania, and Uganda. I think Flutterwave is already pretty well known in the region. There's not
Correct.
too much to say that hasn't been heard of about before. But I think you said to start with myself. I think my background is banking, so transition from banking into fintech. And I think it's one of the best transitions because then we understand financial services from a very different perspective. As far as Flutterwave is concerned, we've built a payments platform that is now live in 32 countries in Africa. We have managed to drive the volumes that are traditionally moved in other forms of payments to our platform, about $25 billion of total processed volume since we set foot in Africa. We are African founded, of course, and the other piece of that business is that we process almost 400 billion transactions in one particular month. So it's quite a robust business that we've set up, enabling us to move money across borders and across different currencies. Now, speaking into the topic that we have today, economic downtimes. When I look at why we are where we are today and why fintech has become the kind of discussions that we're having today, a lot of it was propagated by the need to address specific problems that are facing us in Africa. A number of those problems related to the fact that we are largely a cash economy. And whether we like it or not, I know some people will say that a lot has changed, but it's still almost a 90% cash economy across Africa. So that is a problem that needed to be solved because the cost of moving money obviously increased as the economics and the dynamics around the economies of the different countries changed. So what is the solution for that? Move it to digital as much as you can. And that is why solutions like ourselves begin to thrive, because then we are solving that problem, addressing the issue of the cost of money. And then talking into, and really just getting to my opening statement around
Yes, go on.
Talking into that as well, then the question we begin to ask ourselves, then how do we innovate around those problems that are facing Africans in Africa? Because that is what it became about. But then you also remember that you have Africans and other parts of the world who are looking to move money back home. So what we've done at Flutterwave is we've built 3 or so robust answers to these questions. The first one being, as a business, as a global merchant that is trying to do business across the globe, and you need to collect, receive payments, you need to pay out, you need to make payments, you need to collect and you need to pay out. How do we solve that problem for you? In the middle of volatility in currencies, then what then we've been able to do is to build a platform that enables you to move money, but we don't move the money, we move instructions. When you really think about how things work in the fintech world, it's not the money that moves, it's the instructions that move, because then you need to be careful that you could lose money in the middle of this craziness of currencies. If you look at the Kenya shilling today and what it was barely a year ago, would you really want to be moving around money or really want to be moving around instructions and you have someone who takes the risk? And that's what we do. We take the risk because of that dynamic in the economy. That obviously puts us direct in the discussion of currency deals and being able to make sure that we are part and parcel of FX discussions for our global merchants. And then the third piece of that is you've got individuals who want to send money either back home or across Africa. So there's two discussions. You've got the discussion of the individual in the United States, in the UK, in Canada, who is an African working there, living there, or studying there, and would like to move money back home. Then we provide that solution as well. But the biggest discussion now is the intra-Africa piece of it, because Africa is opening up for Africans across, and Africans are doing business with each other a lot more than they were before. If you look at the AfTA agreements that opens up trade in Africa and all that. So it begins to change the dynamic, but that doesn't change the fact that the economics around the different countries is things are difficult, things are more expensive. And if things get more expensive, the cost of money rises. So when you really think about it, what we're trying to do is to solve the problem of the high cost of money by making it easy to move money around without incurring ridiculous costs.
Leon, thank you so much for that short but very informative opening statement. I'll come back to you on a couple of things, but now I turn to Daniel. Daniel, SasaPay is probably one of the newest kids on the block, starting to make waves. So over to you. Introduction about yourself and SasaPay, and particularly address the subject at hand today.
Fantastic. I thank you and good morning, everyone. My name is Daniel. I've been in the fintech for quite a long time now. I would say, I think about 16 years in the payment space, and recently now joined SasaPay as the CEO to come and, take this brand to the next level. Basically, SasaPay, I would say, was the fourth fintech or the fourth company that got the license from Central Bank to hold money in terms of a wallet that can actually hold value in the country. Say for M-Pesa, which belongs to Safaricom, Airtel Money, which belongs to Airtel, T-Cash belongs to Telcom. SasaPay became the fourth that was able to do everything that those other wallets were doing, but without necessarily belonging to any telco. So usually say we are telco agnostic. So anybody who has a mobile phone can actually get a SasaPay wallet and be able to transfer money. Coming to the topic of the day, I think it is always good to sometimes face those challenges like the ones that are now currently in the country, because history has taught us that it is during the tough times that people innovate. It is during the tough time that people actually try to think what exactly matters to the customer. At SasaPay right now, we are looking at how exactly do we become the choice of the market in getting paid and also in paying out. Recently, in a certain group that we usually have conversations with, these two gentlemen are also in it. Someone came and gave an example that if today I had 1,000 shillings on my hands and I hand it over to the first person here, and they keep giving it to the next person, to the next person, to the next person, by the time it reaches the person seated at the end of the hall right there, they will still have it as 1,000 shillings. Then someone said, if I sent 1,000 shillings to that lady seated here, and now she was to send it to the next lady and then next month, by the time that money reaches that guy at the end, will it still be 1,000? Will it? So, guys, the question here, therefore, is how then does fintech actually compete with cash, because cash is actually our biggest competition, and convince the market that it's actually worth to actually move money in digital? It is during now these tough times that even as SasaPay we are saying we don't believe anymore that people should be paying too much, exorbitantly much, to actually send each other money. And we have come up with very innovative models that are actually removing the cost from the payer, and through collaboration, through financial service institutions and all, we get another better way of monetizing the money movement. So with time, and we believe that within the next few years, people moving money to each other will be actually free, and we are going to be able to monetize that through layering of other products on top of each other. So whether you are receiving money from out of the country to Kenya or you are moving money within the country, we are coming up with models that will ensure that the customer actually is the biggest beneficiary. And just like it is easy to move money for free when it is in cash, despite, of course, we know the challenges that comes with that, then how can we bring that experience also in digital, but still be able to monetize the whole ecosystem? And therefore, the biggest take for me of how fintechs become resilient during tough times is that they are forced to innovate better, they are forced to collaborate more, and I think we'll be opening up, unpacking that whole conversation of what is this collaboration, what is this innovation, and what does it actually matter within the, in terms of building resilience. And I think those are some of the conversations we'll be having. So, ladies and gentlemen, welcome to SasaPay, where every coin matters. Yeah, you can clap, it's allowed.
Thank you, Daniel. I think you've started pinpointing some of the issues that are being faced today. A couple of years back, maybe 2 years ago, I participated in a McKinsey report that started looking at the fintech ecosystem across Africa. And maybe let me just read a small snippet of that report. Between 2020 and 2021, the number of tech startups in Africa tripled to around 5,200 companies. Now, those are the ones that were documented. The ones that are not documented are probably double that. Just under half of these are fintechs, which are making it their business to disrupt and augment traditional financial services. McKinsey analysis shows that African fintechs have already made significant inroads into the market, with estimated revenues of around $4 billion to $6 billion in 2020, and average penetration levels of between 3 and 5%, excluding South Africa. Now, you know, in Kenya, everybody in this room here today, or at least I can almost guarantee more than 90%, is using or has used mobile money. And when you use mobile money in Kenya, we know who you are using. Do we even need to have that conversation? The point of the matter is, financial services today is basically layered on top of mobile money. What we are then now seeing is that people are starting to ask, these costs, these mobile money costs, as Daniel has talked about, are they sustainable? What is the next stage? Leonia has talked about the fact that despite the penetration of digital financial services or fintech, cash transactions are still the majority. So, on one side, we are seeing so-called disruption. On the other side, Daniel is saying, no. We are not competing with anybody. We are competing with cash. Or, as my brothers and sisters from Central will say, fari. We are competing with cash in your hand. So how do we move that metal one step further? So it's not even just about different players looking at markets and saying market share. We are saying 90% of transactions are still in cash.
It's so interesting, and in fact, what Daniel has said, very interesting, because the misconception is that the competition is between the fintechs.
And the banks.
And the banks.
And the telcos.
That's a misconception. We have a $5.6 trillion business and consumer potential spend in Africa today.
Can you repeat that number, please?
That's a McKinsey analysis.
$5.6 trillion.
consumer and business spend potential in Africa today, right? We are arguably one of the biggest fintechs in Africa today, flat. But we are talking about a TPV of $25 billion.
Okay, you know, as techies, sometimes we get ahead of ourselves.
Total processing value.
Thank you.
The total processing, the total processed value value. So the argument that the competition is between banks, fintechs, and telcos is actually a flawed argument. The majority of this money is still circulating as cash, right? Cash comes with its challenges. And in fact, the more the cash in the ecosystem, the higher the cost of money, right? So in a situation where we are talking about economic downtimes, I think every African government should be thinking about how much value do you move into the digital ecosystem as opposed to it sitting in the cash economy. Yeah? And it's probably how you begin to solve that problem, by thinking, by changing the thinking to say, oh, all these fintechs are getting funding, all these fintechs are coming to compete with each other. This cake is so big. There's not one or two fintechs that can finish it. The issue is, what is the problem that we are trying to solve as the fintech startups, founders, fintech operators in Africa today? Banks have done their part, and they have solidified what their market is, so to speak. I wouldn't say they've reached their glass ceiling, but they have reached a fair level of innovation that can only be taken up by entities like ourselves.
So basically what you're saying is that banks have stopped innovating. It's fintechs now who...
Fintechs are now taking to the next level. Banks have not finished innovating,
okay,
right? But if they work, if you look at it today, we cannot work outside of the banking ecosystem.
Correct.
As fintechs, we can't.
Correct.
We still have to partner with them. We still have to operate our businesses within the banking ecosystem globally, in fact. It's not even a Kenya issue or an African issue. The global money ecosystem will still be, the foundation is still banking. Yeah? But then there's a level of innovation that we can tap into because of our dynamism.
Which is what my brother here is talking about,
exactly.
Layering. So, boss, how do you now move to that next level? And I don't want you to give us your secret sauce, but maybe just give us a snippet in terms of how would you make those transactions free? Look, we all know that at some point,
Someone must pay.
at some point, we are going to have to stop paying for payments. But at some point, someone somewhere will need to pick up that bill. Who is that someone, and who is that something that will pick up that bill?
Fantastic. So I would like to start from where Leon has left, and I'll paint a wide picture of what is informing the kind of strategy we have taken at SasaPay as the next steps for building the payment space. So based on who you ask, people will say that we are still at 90% cash, 10%, others will say it's 80-20, others it will be 60-40. But whoever it is you ask, everybody agrees that cash is still the king. So when we say that we are competing, if we are to think from a blue ocean perspective, there is no need to then keep on going for the same. There is a whole big pool here that is still transacting in cash that is untapped. So then the question is, how do we really convince this 60% that is in cash that it is actually good to do it in digital? And it is about asking yourself, what's in it for this person? What's in it for this customer? We are not only now at SasaPay saying that we will not charge customers to send money or to get paid, for example. We are actually saying we have figured a way that this merchant who we give our pay bill or who is being paid via SasaPay is actually getting paid to do that. And then the question is why and how. Just recently I took my mobile banking and I wanted to, I was going through the features in the bank, and one of the features I saw was a call deposit. They were showing the savings product. I know Ali doesn't like savings, he likes investments, but now they were talking of you can save money here, you can save money here, you can save money. And one of the products they had is a call deposit. And I was curious, I just tried I was now keying in. But they told me on the spot, for you to earn any interest on this, you can only earn interest from this money if you invest 50,000 and above. And then I was taken aback. Wait, you have my money, it's actually seated with you. I know you are trading with it, but for you to even to pay me a single shilling on it, you have to demand that I have to put more. So what is the difference between the 49,999 and the 50,000? Why shouldn't everybody be earning from the retro money they have? And that right there taught me something, that now as fintechs, we have the ability to aggregate all these small monies of customers into one big pool and be able to negotiate with the big boys on a rate that is decent enough, and then through a shared prosperity with the customer. So we are not saying that someone will not pay, but we are saying we have figured a way through collaboration with the people who actually need this money, who need it to build more value. We go to them and tell them, look, all my customers have put all this money here. Okay, out of the X, we are actually going to cash it back to the customer. And that way you do not only make it free, you're actually making it more productive even to the customer. Once you fix that side, now go back to the customer and tell them, look, I'm actually paying you to get paid digitally. So why should you then continue collecting money in cash? And even if you collected it in cash, please introduce it into the economy through our agents. Just go to our agent, put that money into your account. What is happening therefore is the money that sits in the mattresses, in wherever people keep their cash, will now start finding its way into the digital economy. And the more liquidity is in the economy, the more banks are able to lend more and to give more products that are going to grow these same businesses. So we are telling the businesses, look, there is a way here that instead of putting the money in your pocket, put it into SasaPay, for example. SasaPay will ensure you get a return on it. And because of the digital transactions we can see, we now bring in that money, that financial institution who is going out to invest back into your business and grow it bigger. So we cannot sit back and cry that the economy is bad. We have to look for innovative way of bringing all this value that is scattered all over into one big pool, a pool that is big enough now to build other products on top of them, be it lending, be it insurance, be it investments. Whatever now you want to do with this money, it generates more for you simply because you are putting it into the economy. It is a matter of looking at fintech and saying, fintechs are very well known of innovating on the tech, but we have somehow neglected innovating on the fin part of the fintech. So we are looking now, how can we now become more innovative on the fin of this tech, the fintech part of it, and now build more value, more returns to the customer, to our customers, and that way everybody will win. It's a win-win for all the people in the ecosystem.
Daniel, thank you so much for that elaboration. Before I come back to my panelists, maybe somebody in the audience has a burning question or comment. This is a time for us to have this conversation. I don't want us to just be talking to ourselves here. Any burning question or comment from the audience? Anyone? So basically, as guys are done here, we can move away. All right. As we wait for you guys to think through some of the things that we are saying, back to my panelists. And I would like to, for both of you, to discuss the issue around agency banking, and the whole ecosystem about agency, and where we are moving. Now, Leon, you've talked about the fact that, which I am completely aligned to, digital payments are only 10%. And then we have, in Kenya at least, which has the most successful agency banking or agency finance ecosystem anywhere in the world today, we still are primarily a cash-in, cash-out ecosystem of agents. So you go to an agent, you want to deposit money. You go to an agent, you want to get money out. How do we transform that agency ecosystem to become part and parcel of a seamless digital financial services ecosystem? This agency ecosystem is super important to ensure that we continuously move towards a fully digitized financial services ecosystem. But how do we add value to that agency ecosystem? Who wants to go first? Leon?
I can go first. Interesting question, and thank you for that. I have had the privilege of being ahead of digital in two banks, Family and CDN Bank.
Yes.
And very instrumental in building out what is now PesaPap agents for Family Bank, from conception to the time that we rolled out that. And I think, and I was there at the time when we started agency banking at KCB as well.
Okay.
So I think banks sort of got this right but got this wrong at the same time.
They got it right, but they got it wrong at the same time.
Yes.
Elaborate, please.
They got it right in the sense that they created an opportunity for cash to be mopped out from the market into
the banking ecosystem.
the banking ecosystem. But then the model quickly changed into agents becoming extension of the bank.
Okay.
In the sense that if you look at the transactions that happen in agents in banks today, it's 50-50 cash withdrawal and cash deposit.
So it cancels itself
It cancels
out.
itself out. So it didn't arrive at that purpose that was meant to be. So,
And why do you think that's the case? From your hypothesis?
because we did not create opportunities to make digital payments as banks. Payments still needed to be made in cash. I'll give you multiple examples, and I'll tell you what we are also doing at Flutterwave.
Okay.
So, if you make me move my money into a bank, then show me how I'll use other tools or other channels in the bank to make payments.
Otherwise, I'll just remove
Otherwise,
it.
I'll just remove that money and
When
go
I
make my
need it.
payment cash when I need it. And that's exactly what happened. So we are the first fintech in Africa to roll out an agency network. We have rolled out about 7,000 agents in Nigeria already. We are looking at how we can roll agents in other markets in Africa that we already licensed. For most African countries, you need a separate license to be an agent, and of course a bank
Yes.
partner.
So you need an agency banking
You need
license.
an agency banking license. Where,
Did you need that in Nigeria
yes,
also?
we did.
Okay.
Yes, we did. We
So
also needed that in
so first you must get a
payments license.
payments
Yes, we did.
license, and then you must get, so at some point we'll come to that regulatory
The
and
regulatory
policy.
bit, yes.
Okay,
So,
go on.
so this has given us an opportunity to get our customers, to give them an opportunity to say, okay, I've got this amount of cash, and I want it in my Flutterwave for business account. Where do I go? I can go now to a Flutterwave agent
Okay.
in the countries that we are able to do that.
Okay.
Once that money is in the ecosystem, the next step is, how do I use this money while it's in this ecosystem? So we are, and that is why we have onboarded over 1 million merchants so far globally, so that you can use that same platform to make payments to whoever you want to pay to. Understand? So let me give you a very easy example, events. events is big, and I know there are marketers in the house today, and people who actually do event management. Even this is an event. In the past, the majority of the time it would be, you have to come to the event, pay cash at the door to access the event. And then the event organizers would now take the next step of getting G4S and all these other guys to do the cash in transit, the CIT, to the bank, or talk to the bank to come and CIT that money to the bank. Today we are telling you that we can process as a fintech. I'm sure SASSA can do it, we can do it. We have ticketing as a service. So wherever your money is sitting, you no longer have to get cash out of that system.
You're taking care of the whole ecosystem.
We're taking care of that ecosystem now.
Okay.
And that's what we're saying, that agency banking, now back to your question.
Yes.
Agency by fintechs. If you ask me how can we model it into the future, we should use it as an opportunity to mop up cash out of the cash economy into the digital ecosystem, then provide rails for making payment directly from the digital ecosystems. We should have payment options, whether it's card, whether it's Google Pay, Apple Pay, all those options that are
complete
integration, so that I don't see the need to go and withdraw cash to make a payment. Yeah? So we have to do it two-front. One, I'll give you an opportunity to mop up your cash into my ecosystem. But then I go as a fintech and interact that you will need to pay for at some point, right? Then you never have to get cash out because you can still go to the same platform, make a payment to Uber, make a payment to Airbnb, make a payment to Netflix, right? Directly from the same ecosystem.
That's the case.
Again, we haven't provided enough rail for you to be able to think about that payment as a digital payment as opposed to a cash payment.
Okay.
Yeah.
Daniel, over to you. Anything to add there?
So he has said it in so depth, and you know he's an expert in agency.
Yes.
So I would say on top of what addition is one of the challenges I see with agency banking is lack of interoperability. So I'm an agent of Bank X, and I'm an agent of Bank Y, an agent of Bank Z. Each of those banks want me to put money with them, separate. Then one of the banks...
You have like 5, 6, 10 PDQs. 10
PDQs. Remember, to an agent, the float they put in the bank is like their stock.
Yes.
It costs them money to keep that money there. And you only make money based on how quickly you turn it around, because it's transactional.
So the velocity. The
velocity of it. So if I'm breaking it in so many pieces, it means one day, if Bank X has got more customers, the flow tends to maybe go quickly, but there is more money seated in these other banks, which is not generating me any income. So why can't the banks actually agree? We have this one agent, one single float, and then you can serve them all. And that is one of the advantages or one of the opportunities as SASSAPay we are looking at and saying, we are the most interoperable payment service right now, whereby, as Leon was saying, if you are a merchant and the money is now in your ecosystem, whether you are paid in cash and now you have introduced it, you can now pay to anybody from that wallet, whether into a bank account, whether they want the money into another SASSAPay wallet, Airtel Money wallet, M-Pesa wallet. So you no longer need to start thinking, you have to separate these monies. This one is for SASSAPay, this one is for going to M-Pesa. It is one single float, and you are able to pay everywhere else. One single agent who can serve any customer from whatever channel they are coming from. That interoperability will now make the agency more profitable, and the more profitable it gets, it means, again, the cheaper it can now get even for the customer at the end of the day. So I think with Leon's input, that's the only one I can add in terms of we ought to make it more interoperable, hence more efficient, and rely a lot on technology to ensure that the safety and everything of the money going through it is guaranteed.
Daniel, thank you so much. I come back to my audience now. Any comments or questions from my audience? Someone? Yes? Please provide a mic. Please introduce yourself and Let's hear what.
Yeah.
Yes, sir.
Good morning, everybody.
Morning.
Yeah, just to give you a lot of support because I know it's cold and we are seated at this other side and you're feeling the cold. So just out of curiosity, my name is Isaiah Opio from TransUnion.
From?
TransUnion.
TransUnion.
Yes. So my question is, I know before COVID, the government waived some of the transaction costs for money transfer. From where you sit today, and we're looking at a situation where the only way cash can actually compete, and the only way digital money can compete with cash transaction is if we waiver everything. And there's no business, or I've never heard of an NGO that does money transfer, meaning all cost free. From where you sit, and looking at the cost of withdrawal and the cost of remittance, which one would you do away with that would motivate the consumer out there? Before you talk about doing away with the costs, which one do you think would motivate a consumer here to feel that at least there's a service? Because consumers are here to appreciate convenience. They're here to appreciate security. They look at it as a cost. And number two, right now, I know there is the conversation coming around regulation. Anytime you tell the consumer out there about digital money, they think about KRA. So how are you going to...
I knew that question was going to come.
Yeah, how are you going to actually safeguard yourself from that conversation? Because out there, last year there was a lot of guys picking up till numbers and all this. But right now, tell them about digital money, they tell you, staki maneno mingi na KRA. Thank you.
That's a couple of questions. Leon, Daniel, who wants to go first?
So I can take the cost one, then Leon take KRA one. Okay.
I'm happy to take the KRA one if Leon feels.
Anyway, so from where we sit, and I'm glad you have given the example of that COVID waiver, that period. Actually, the number of people using mobile money increased significantly. Then suddenly now when the costs were introduced, the number started shrinking. That tells you the story we are saying here, that actually one of the barriers could be the cost, that people don't want to use it. And I gave the example of 1,000 shillings, and it may sound so simplistic, but if you contemplate on that thing so deeply, you see the sense. And that's how the customer thinks. That if I was given 1,000 bob, I'll repeat it, and we start turning it around here, by the time it gets back there, it will still be 1,000. But if I sent this guy to his mobile wallet money, 1,000, and he starts sending to the next person, by the time it reaches at the end there, it will be maybe half of it or less. Every coin there will be some pinching of a bit. So how then do we look at this and look at it critically and say, how then do we make sure that using digital is almost as good as using cash, and the elimination of the costs might be one of the biggest factor? And to be honest, even the market have realized that. I was looking at the history of mobile money, or let's say of digital payments. Many years back, when there was only one bank, I think it was not Absa, then it was Barclays. They had a Barclay card, and they were the first to start issuing POS machines around. And you could swipe your card there, and then you sign a receipt, and then they had to call. It was so technical doing it. And the merchant, I think, was paying about 4%. Then Equity Bank came and started also issuing the POS machine. I think KCB also started, and so on, and the cost started coming down. So then came M-Pesa that started now charging 0.5. SasaPay came, we started charging 0.2. Just recently, Equity has said now we are going to issue the till, kulipwa ni free. It's now at 0. And now SasaPay has come and we are saying we're actually going to pay you something. If you look at that history, every single period, the costs have been coming down. And the same about even now, the pioneer of mobile money really was M-Pesa. And if you think about the number of the cost of the transaction we used to pay then versus what we are now paying today, it is a very fast race towards zero, the rock bottom. They keep going down and down and down. So ultimately, now payers are asking, wait a minute, why should I be paying you to move money? And it's my money, and actually you are the one who benefits when it is in digital space. So what we would do is now again come back to innovation and ask, when this money is in the digital space, what can it actually do? And whatever it is actually doing for the economy, can we now start thinking of paying this guy back, or at least subsidizing their cost using the benefits you derive from having that money in the digital? So, for example, today a bank can easily say it won't charge you to pay because if they want that deposit with them, then they can go back and lend that money at a much higher rate. Therefore, that higher rate they are generating, is it enough, therefore, to come and subsidize this cost or even actually make it free? So I think your question is very valid and makes a lot of sense in that ultimately it will be a zero. That's why people are saying it's too expensive to actually be sent money via digital. So why don't you make it zero?
Thank you very much, Daniel. Leon?
Yeah, I'm going to make it very short because Daniel has covered it. My immediate former employer came up with a very interesting product and stated that sending money is a basic need, and why should you charge to send money? And I think it was a very innovative thing that, of course, it was on the basis of a cross-border payment solution, so obviously you make money off your currency FX deals. But I agree with that statement that it has come to a point where sending money is a very basic need, and therefore the model, we should rethink the costing model around that for customers. But then I also want to flip the script on you. Handling cash handling as a whole is a very expensive venture for those who handle cash. It is in the best interest of financial services institutions to move their transactions to digital as much as possible. CIT in itself, people don't think that. The cost of having a teller in a bank, people don't think about that. Yeah? But when you begin to look at the cost of handling money in cash, as a consumer, you may think, okay, it's 1,000 for 1,000. Yes? Maybe it's beneficial for the consumer. But for the eventual handler of that cash, whether it is a bank, whether it's an agent, or whoever it is handling that cash, there is a cost to it. So we may have the cost of technology, but there's also a cost of handling cash on this other side of things. So the question is, how do we balance it out? Because at the end of the day, we may not even be selling you technology, we are selling you convenience. At the end of the day, what we are selling you is convenience more than anything else. And the question is there a cost to convenience? Perhaps not.
So I see both my panelists have avoided the KRA question. So let me jump in and help here. And to turn that question back at you, why are you afraid to pay your taxes? Why are you afraid to pay your taxes? If your problem is how the taxes are used, then deal with the leadership issue. Don't deal with the tax collector. The tax collector is just collecting money. He needs to collect money to make sure the country works. The problem is not KRA. Let's deal with the leadership issue as opposed to the other issue. That is just a symptom of where we are at. Ultimately, we must all pay our taxes.
Actually, I didn't avoid the question, Ali. I forgot because I only had one statement.
Okay, go ahead.
My statement on the tax question is, and to Caesar, give what is his.
Absolutely.
Then hold Caesar accountable
Absolutely.
for what services they should offer to you. And I think that's where we have the biggest failure. But we all have a tax obligation.
You see, as a business, as a responsible citizen, we must all pay our taxes. And by the way, it's a positive advantage if you have your books clear as far as tax compliance is concerned. I don't think I need to delve into that. Comments. We are coming to the end of our panel today. How much more time do I have, sir? Any other questions, comments? Great. So I will go back to my panelists for their closing statements. I'll then close off and we move to the next session. Daniel, back to you. Your closing comments.
Thank you so much for this opportunity and for the session. I would like to say that we believe that the way we will be building resilient fintechs will be, first of all, being very customer obsessed. Ultimately, the person with the money is the customer. So focus more on the customer and their needs. And whatever little is left, they will actually share with you. Two is collaboration. The best way we can get more from the same customer, even during the tough time, will be when we come together and build something that is so unique, that is so great, adds much more value to the customer. That way they stay longer with you, and you become their obvious choice out of the many options out there in the market. And finally is that digital payments, fintech thereof, will be one of the ways that makes the market very efficient. During tough times, again, everybody looks at how do I save costs. So the issue here will be we can rely on the digital platforms to actually increase the efficiency of how this payments space happens. Recently, I spoke to a bank and I was telling them, bringing back the agency story, instead of having so many agents across the market yourselves, why don't you ride on the SasaPay agents and the SasaPay merchants across the world, across the country, and they become your agents. It made a lot of sense. So those kind of collaboration where if I've already built some network or some infrastructure thereof, can someone else come and ride on it at a very minimal cost compared to them restarting all over again? And then when we think all these things together from a collaboration perspective, I think we can actually survive the tough times. Finally, let's innovate, guys. Let's think different, out of the box, or rather as if there is no box. It does not have to always be done in one way. Tough times, again, will push us into thinking differently and very innovatively for the sake, again, of adding value to the clients. That would be my closing.
Thank you. Thank you so much, Daniel.
All right.
Leon?
Thank you. I'll close my statement. My closing statement will be anchored on two things. One, as we face economic downtimes, as we talk about it, and as we say the economy, yes, the changes in the different economies, whether it's the Kenyan economy or the African economy as a whole. But I also want to finish with addressing something that Daniel said. Where is the fin in the tech? Yeah? Where is the fin in the tech? We are building the tech. But where is the fin in it? And I'll use some statistics that has also helped us in how we've innovated our business as Flutterwave. The media and entertainment space is a $25 billion economy by itself. Yeah? Whether you talk about events, whether you talk about entertainment in the form of Netflix and all those other type of entertainment, that economy in itself, media and entertainment, is a $25 billion economy. That is the entire TPV of Flutterwave, or total processing value of Flutterwave since its inception. It means that we've only scratched the surface. So there's still a lot more. The e-commerce economy is a $37 billion economy. Yeah? And that includes its physical goods being sold through digital platforms. That's basically what e-commerce is, right? So that entire economy is 37 billion. The remittance side of things, and there are very many remittance players and platforms in the market today, is in itself a $47 billion economy, 10% of which is Kenya. 10% of that 47 billion is Kenya. Another almost 15 to 20%.
We are talking about the African market here.
Yes.
Of course, okay.
47 billion is just the African market, is into Africa. The travel, Africa travel alone is a $22 billion economy. Another subject that is not widely talked about because Kenyans avoid that subject is the crypto economy. That's a $240 billion.
Let's be clear. It's not Kenyans that avoid the subject. It's the government that avoids the subject.
Okay. Well put, Ali. Very correct. That subject is widely avoided, but it's a $240 billion economy. That means that we in the fintech space have not even really begun to address the needs of our customers across this continent in terms of what they need to do with their money in the digital space. We need to offer more than we are offering already. And as the economies change, as the dynamics of the economics change in the different parts of Africa, then we have no choice but to build out and to continue pushing what we are capable of. So that's the fin now.
Absolutely.
In the tech.
Leon, Dan, thank you so much for spending the time with us here today morning. Thank you guys for being here. This is the first session of the Digital and Technology Week. For me, I just want to close this with just a couple of comments. Number one, digital payments, digital economy is just 10% of what we are doing today. So instead of all of us just fighting for the 10% and forgetting there's a 90% to be dealt with, we haven't even started talking about agriculture, agri-tech, and the huge opportunities that are there. Africa has 60% of the world's available arable land. And yet, a small war in Ukraine, we are already starting to suffer. Food for thought. The other thing I would like us to always think about is, what game are you playing? Are you playing a finite game, or are you playing an infinite game? Those are very important questions to ask every morning as we wake up. Last but not least, to remember the oft mentioned and talked about word in Nairobi today. Everything you do, just remember one thing. Vitu kwa ground ni different. Thank you very much. Thanks, boss.
Thank you, Ali.
Asante sana.
Appreciate it.
Great, done.
Another round of applause for Ali Hussein. Good job, good job. Asante sana. Thank you so much, gentlemen, for that discussion kickstarting Digital and Technology Week 2023. This is the 8th edition. Some very interesting conversations. And this is the kind of conversation we'll be having throughout the 3 days, the next 3 days. We're just about to have another conversation, but yes, another round of applause to Ali Hussein, Leon Kiptum, and Daniel Kiriungi, our panelists, for that conversation. A round of applause to Fadali. Now, a quick run through some of what they've talked about. Briefly, I'm not an expert in these matters, but I can write down a few notes. And the cost has come out as one of the biggest barriers for fintechs and people dealing with digital cash. And one of the opportunities is what to do with the money once it is in the digital space, how to monetize so that the cost does not end up with a customer, but is handled at a different layer. A very interesting conversation. Let's move on to the other conversation this morning. The next conversation this morning is about rethinking digital lending. And for this one, allow me to introduce the moderator, Caroline Kendi. Caroline Kendi is a Chief Marketing Officer, Absa Bank. Karibu sana Caroline Kendi to the stage. A round of applause for Caroline. And as she makes her way to the stage, Caroline is the Chief Marketing Officer, Absa Bank, Kenya PLC, a position she has held since December 2022. She is leading the next phase of Absa's brand growth journey, which is focused on solidifying Absa's brand purpose of to empower Africa's tomorrow together, one story at a time, as the bank continues to play its rightful role in supporting Kenya's economic transformation. She is in charge of providing strategic direction and oversight for brand, marketing, communications, sustainability, and corporate relations. Kendi has over 20 years of brand building experience, having started as a graduate trainee at Unilever in 2002, shortly after graduating from the University of Nairobi. Another round of applause for Caroline Kendi, our moderator for the next session. Caroline, over to you. Invite your panelists. Sorry for that.
Good morning, everyone. So this is going to be a bit of a engaging panel, a session. So we expect engagement from you guys. So a little bit of nodding, smiling, and when I introduce the panelists, you can even do a whoop whoop. Agreed? Agreed? Thank you. I told you we're talking. Okay, so the first person I'll invite to the stage. So my name is Caroline Kendi, and I'm really excited to be here because when I think of digital lending, and I think of young people, and I'm very passionate about young people, about the gig economy, so I really want us to see what kind of solutions and what are we thinking about, what are the trends and what's going on in that space that's actually going to accelerate this. So the first person I'm going to call on stage is Michael Miner. Michael Miner is the COO of Lipa Later. Karibu, Michael. Woo, woo, cheer. Yeah, thank you very much. Michael is a lawyer by training, a driven entrepreneur with lots of expertise in both business and in the legal fields. And he's actually a fellow at the Center for Financial Inclusion at Axion. Yeah. So shout out to a round of applause. Thank you. Second person on stage is George Kebaso. He is the head of products and marketing, mobile experience division, Samsung East Africa. He started his career as an engineer. As you can see, we've started lawyers, engineers. You see, this fintech, there's no specific with regards to where you started. So he started his career as an engineer and quickly ascending the ranks due to his ability to translate complex technical concepts into consumer-friendly solutions. He's an expert on mobile technology, product strategies, and impactful marketing. A round of applause. Karibu, George. Since this panel is extremely gender balanced, I'm going to call out my long-term friend, colleague for a long time, Anna Othoro. Anna Othoro is a business development consultant, currently at Faraja Credit. She has 25 years of valuable experience in sales, marketing, general management, and governance. Previous roles include GSK category portfolio within the regions as a marketing director in Kenya, Celtel International, and ESA Telcom Kenya and Telcom Kenya. Karibu. The next powerful woman on this panel is Winnie Shira. Karibu, Winnie, who's the managing director of Periculum. She is a skilled business and sales leader with over 15 years experience in leading sales operations within sub-Saharan Africa. Passionate about startups, fintech, data infrastructure, AI, and machine learning. And today she's going to talk to us a lot about machine learning and AI. Round of applause. And then last but not least is Munyi Viga. Munyi Viga is the co-founder and managing director of Vorian Corelli, which is an agri startup. He's also the Secretary General and Board Member, Association of Fintechs in Kenya, among others. He's passionate about solving problems, payment fragmentation issued in Africa, and has led teams in creating products that solve the most pressing needs in the nascent of Africa's digital economy. We were giggling earlier, and he said he's going to tell us about mashinani, right? And I think it's just echoing what Ali was talking about. Qua ground, So we have a great expert who's going to tell us how to scale and how to be relevant to the everyday Kenya. Karibu. So a round of applause for the panelists. Great. So I'll kick off the conversation with giving everybody an opportunity. I start most of my meetings with a thing I call a check-in. So a check-in is on a scale of 1 to 10. How are you feeling today and why? Okay, panelists, are we together?
Yes.
And then, as you introduce yourself, one of the things we know is, and I think even the panel earlier talked about the issues and opportunities that exist when you talk about digital, lending, right? And we talk about digital lending particularly. So what is one issue or opportunity that you see from where you sit? And maybe as you talk about what you do in your company, what is one of the solutions that you have in place to actually address that, right? So it's a bit of a, but one is you as an individual, scale of 1 to 10, how are you doing? What is the one issue opportunity that you see and how you and your organization are solving for that? I think I'll start with George on that end.
Right.
Karibu.
Thank you. First of all, thank you so much for having me. You said what, on a scale of 1 to 10, how do I feel? Probably an 11.
Fantastic.
Yeah. And for starters, I'd welcome everyone to experience our products at the back there. My name is George, product lead at mobile division, Samsung Electronics East Africa. So, question is, what are the opportunities that I see in this industry? One, coming from an electronics background, there's a lot of opportunity in device financing, whether it's consumer electronics or mobile phones, be it laptops, whatever industry you're in, especially in the electronics sector, I'd say there's a big opportunity in device financing. What is a risk or something that we can look at to mitigate is credit rating. If we can be able to overcome credit rating in device financing, I think that opportunity is endless.
Fantastic. Thanks for that. And I love that you've talked about credit rating, because I will go to Winnie here, who is our AI machine learning expert. So as you introduce yourself, obviously you're checking. You can probably even just pick up from what he's saying.
Am I loud? Am I audible?
Switch on. It's on. Yeah, go.
It's on.
Yeah.
Can you hear me?
Yeah. Go ahead.
I'm Winnie Shira. Happy to be here. On a scale of 1 to 10, well, you said 11. I think I'll stay at 10. I would have given it much lower. And opportunity in the market is we have a lot of data, and the opportunity to be able to inform the credit rating is being able to use analytics to make sense of the data. So there's a large opportunity because we have a lot of data, but we don't know how to make sense of it.
Mm-hmm.
Yeah.
Yeah, fantastic. And I think we'll go a little bit deeper into what we can do. I think I'll go now to Muni.
Thank you, and thank you for having me here. So on a scale of 1 to 10, I'll say probably a 7. Reason why I had quite a tough night and morning. I was feeling not quite well, but I'm glad to be here. Yeah, I think for me, what I do, I wear many hats, but today I come here as somebody who's invested in the agri-tech space and dealing with the smallholder farmers in Kenya. And reason being is, when I look at, the KNBS data and I look at the different sectors of our economy, there are certain spaces where I feel we still haven't really quite innovated around. And one of them is agriculture, and we'll speak a lot more about it. And for me, I see the opportunity in agriculture around contextual lending. If you look at the broader spectrum of, the digital lending products that we have in the market, I would say more or less traditional. We're getting to a point of saturation, if you ask me, because we've got a replica of so many products having the same number of customers. And like the previous panel has mentioned, you're only at 10%. And this is on payments, you're not even gotten into digital lending. So I see a huge opportunity in there. And I think the only way to move that needle is if we get deeper into very specific ecosystems and start solving for very specific challenges in there so that we can get to drive value.
Fantastic. Thank you, and thank you for being here. I can't wait to talk more about what more we can do to get that 90%. And last but not least, Anna, go for it.
What am I? Where am I? 1 to 10?
Yeah.
Right? I'll say a 10, and a 10 because I'm seated here this morning with a vibrant panel of panelists, and talking about what has become my favorite subject, which is digital lending. And one of the things, and we talked about earlier this morning with you, Kendi, it's about looking at our why. Why are we in this business? Why are we in the digital lending space? And my biggest why is to be able to impact our consumers' lives. Because when people go out to borrow money, they're not really, some of them are borrowing because they're in need, right? And one of the things that we set out as Edomex with our product Faraja is to look at how we can kind of alleviate the stress that they go through. And one word around that stress is predatory lending. And we all know about it. We've heard the stories all over the place where somebody has borrowed 1,000 shillings and what they need to pay back after the period ends up being way more than what they borrowed, right? And simply because they were not fully in the picture as to what the fees and charges in there related to. And so you borrow because you need the money, but when you have to pay it back, you're still in the same position you were in when you borrowed it. And so for me, getting into this space to solve that problem, that's my biggest passion, what drives me, my fuel.
Fantastic.
So to speak. Yeah.
And I really like that conversation because I'm also very passionate about the customer, yeah, and seeing everything we're doing, how are we making sure that we are actually solving. And traditionally, when I think of lending, in fact, the memory I have, and I don't know if I'm betraying my age, but there's a time when you learned about lending and loans, it was because people's things were being repossessed, right? The story around lending that is told is usually the story of the part that when somebody hasn't been able to pay. And therefore, I actually also grew up with this thing of loans are bad, debt is bad. In fact, when somebody has made it in life, they say, I've made it, I have no loans. So in a world where we're trying to enable digital lending, right? And I'll go to Mark. And the reason why, Michael, and the reason why we have that problem usually is because for this thing to work, it has to work for the customer and it has to work for businesses, right? If you have something that works only for customers, what happens? You have NPL, right? People don't pay you back, your business doesn't work. If you have something that happens that doesn't work for customers, you end up having that negative sentiment around lending, and more importantly, people then just won't borrow. So when I look at Lipa Later, what do you have in place that is protecting you as a business, right? When it comes to, what are you thinking about? How do you protect your business as well as do the right thing for the customer?
Great, thanks for that, Kendi. I'll start by saying, on a scale of 1 to 10.
I didn't introduce you, I'm so sorry.
I have dropped from a 10 to a 2. No, I joke. I'm still at a 10. Mostly because of this wonderful panel that we have before us, very insightful people, industry leaders as well. And my name is Michael Miner. I run the operations at Lipa Later. And mostly we've become known in the market as your primary buy now, pay later organization in Kenya. But we've since also evolved with a few other products. We have now built a community where we link our retailers and our merchants to our consumers. So that ecosystem and that community ensures that there's commerce, which is a very big part to play together with digital lending. So you might know there's also Sky Garden that came into play that's really now starting to take off again in terms of e-commerce and linking that to digital lending. And there's another product which we have which is called PayCloud, which is also trying to create a sort of like a neobank for merchants, because we now came to realize the biggest issues that SMEs are going through in Kenya, in Africa at large, is that access to credit, right? I think George touched on it with regards to opening up what digital lending is. If you look at Faraja product and what they're trying to do in terms of ensuring that they have their clients who can be able to access these products in a way that has dignity. I think that's what is one of the most important things. Can we access credit in a dignified manner, where there's no predatory lending, where we are working together with our merchants, our consumers, and our retailers to create this ecosystem of our community. We cannot really do business right now if we're not thinking together as one, right? So in terms of protective measures, to be honest with you, I think there has to be a lot more in terms of collaboration. I know you'll probably even talk a bit more about it in terms of, as digital lenders, what we're trying to do in terms of collaborating with government. For them to really understand, for us to make a meaningful impact, we need collaboration. We cannot have certain laws or acts that are changing without that, synchronicity, if you want to call it, between digital lenders as well as the government or the economy. So to that effect, you look at the CRB, alternative ways of credit scoring, which Curriculum is really, really good at. But we have to look at alternative forms of data to be able to analyze a pool of clients who would typically not be able to qualify for credit, right? So we need to really work together to ensure there's protection from, consumers who might not necessarily have these data points, historical data, financial data, right? And in that same pool of clients, we also find that there are people who, there's bad from the credit point of view, but there's also bad from the client point of view, where there's a lot of fraudsters in the market, taking advantage of different opportunities and gaps from a digital lending perspective, right? So if we're able to come together with, the data leads, such as Curriculum, if we're able to come together with some of the traditional data points, such as Metropole or TransUnion, your normal CRB sort of like data, and pull together, we can create such a great ecosystem where we can actually protect ourselves as digital lenders and ensure that we open up more credit for our clients in the market.
And I think that's such a powerful point. Number one, collaboration, right? Because at the end of the day, if you're talking about capturing 90% of the market, it's not only one person who will be able to do it, right? It's about how do you pull together. The second thing which I really love is this conversation around AI. And I mean, I just recently joined banking. And the most interesting thing for me when I got into banking is initially, the first thing banks see is that fraudster. I was telling Anna earlier. You start as a fraudster and then you work yourself backwards into being a decent person who's going to pay back. Yes. And that's because it is true. I mean, every day there's people everywhere trying to be fraudulent and trying to take advantage of the system. So I think I'll go to Winnie now and say, in this world, because I say it's such a beautiful time to be alive with things like AI, technology, machine learning, what is the role that artificial intelligence and machine learning can play in helping us get a better sense of who's a fraudster and who's not?
Yeah, very good question. So one of the issues AI solves is fraudulence.
This technology is not working for you.
Not to me.
Who is it? Who is this?
Please, my throat chakra. Hello.
It's not working.
This is the commercial break. Since this is when I say at ABSA, hello. We have Timiza. There's a banner there. Are you good? I told you this was going to be a random panel. Are you good? Tech team. Okay, they say we give them. So as I was saying, during this commercial break, I will speak about Timiza from outside. Ukondani na Timiza. It is a digital product. How many people here have tried Timiza? Okay, good. Go to your phone. Download Timiza. No, I'm just kidding. Are we good?
No.
Okay. We will not continue.
Hello.
Can I give you mine?
Okay. Will you donate your microphone? Yeah, I like that. There's some chivalry is not dead.
Yeah, it can be here. Hola.
Look at you. Welcome back.
Yeah. So the question of AI and fraudsters. So one of the things AI solves is fraudulent activities. So you're able to mimic, let's say you have an original statement looks a certain way. So when you train the model, you're able to pick subsequent fraudulent ones. So from fraudsters, you're able to pick very quickly because it solves that part of collecting the data extraction, and then you verify the data, then be able to analyze it in a way that is meaningful. So yes, it will solve the credit issues because you need alternative data for people who have thin files. Credit bureaus have very thin files. People are not exposed. So if you are able to look at more data and add credit union data and also add transactional data, then you run your AI models. It's a perfect space.
So when you say alternative data, to a layman as myself,
yes,
what is that?
It's consumer data, consumer permissioned data. I, as Shira, can allow ABSA to take more data from me to be able to score me more, give me, better uplift to my loans, just to understand me more, because ABSA will only know what they have. As the person lending will only have their transactional data and maybe exposure to CRB data. But more data allows you, where we Periculum play at, so we are able to data extract in a compliant way, even though it's always changing. And then we are able to verify this data using AI, and then we run ML models to give you the variables that you need to lend.
Okay, fantastic. So that means when I'm browsing and I'm going anywhere, when it tells me accept all cookies or deny, I shouldn't always say no.
No, don't say no. Just go read what cookies that you want. Don't say yes either, but you should be able to go and read. Most of us just say yes. Tap, tap, tap. Also, the need to get a loan just makes you say yes to everything, leading to those guys who loan shame. So you have the right to your data. Give your data in a way that is helpful to you, not just out of need.
Fantastic. And I think I'll now go to Anna, because Anna has a product that can either be loan shaming or solving. And in a world where, there's data protection, right? And these days we are so, worried about what people know. And yet, again, on this other side, the more they know, the more they're, with technology and AI, I'm able to position better for you. At Faraja, how are you guys tackling this, and what are the insights that you can share with us with regards to actually now converting this into a solution for customers?
Okay. So one of the things we looked at a bare minimum when we were looking at the why is, why are people borrowing money? And they borrow money for various reasons. And when you look at it from a positive perspective, you've run out of cash, you're working, you're literally living from paycheck to paycheck, and you need that little money to tide you over to the end of the month, right? And many are looking for, and that's why in the digital space, digital lending came up, because you can get microloans. You don't have to go, to the banks and give all types or manner of data to be able to be scored and given a loan. But when you think about it, when the banks are scoring, the data they use is something that they can touch. It's tangible, right? But when it comes to digital lending, the data we use is not tangible. It's intangible in the sense that we are now scoring behavior. How are you behaving? When you're going out to look for a loan, and you've taken a loan, how do you use it? How do you pay it back, right? And therefore, in that instance, there's a certain, the data that we get is able to tell us, if I'm a loan taker, this is Anna, this is what happens when Anna, and that's where the credit bureaus come in. They take a look at your borrowing behavior, right? But if I am not a borrower and have not been a borrower, it means the data that they collect might not score me well, because at the end of it all, I'm not the kind of person that they can see on their system. I've not taken any loans and I've not returned. So, in fact, the scoring systems and engines that we have right now kind of like reward you. Not a bad thing. So if you're borrowing and then returning, the higher your credit score, right? If you're not returning, then goes down your credit score, and then it determines what they give you in terms of a limit, right? So where we come in as Faraja, we said, what are people borrowing money for within, the one paycheck to the next? They're looking for money for household goods. They're looking to pay for utilities, for their telephone, their mobile utilities. They're looking for Kenya Power, pay water, pay light. Those are the things they're looking for. So we said, why not partner with merchants, right, who to receive credit. So it's like a virtual credit card for a better way of explanation. So they would be able to receive that Faraja credit, and you get to purchase what you need at that point in time. What happens when we get access to loans, right? Our mindset is such that money, I'm a person in India, right? So you end up, you wanted to take money to pay for this, but you end up paying for so many other things simply because the money is in the wallet. So when we come in is we tell you, we're giving you a credit limit. You can go and spend at partnering merchants, right? And then you can pay back at 0% interest. As simple as that. So what you borrow is what you pay back. Now that was the why. We were trying to sort out the issue of people taking loans, and at the end of the month, they pay with interest, which is fantastic. They have to pay with interest. But then the penalties is what kicks people in the behind, if I can say that, right? So the penalties come in when you're unable to pay. So where we came in, we said, you get the money and go and spend. So now you have to think, what do I want to spend this money on? So it's not just free money that you're being given. You have to think about what it is. And then after the given period, and for us it's 30 days, you then pay it back. And then you can start the borrowing cycle again, right? So in that way, it also helps. I was telling Kendi this morning, I said, I'm a big user of Faraja. Why? It has helped me manage my household spending. Yeah? Not that I didn't have, and the other problem I had was I didn't have a footprint because I don't take loans. So when it came to getting a credit score, my credit score was really low, but I am the person that you want to lend to because I'm the person who will pay you back, right? So it's how to get Anna into the fray. So Faraja puts Anna into the credit scoring data because now I'm willing to use Faraja. What I borrow is what I pay back, and it helps me manage my household, right? And so in that regard, the data collected from me as I borrow and pay back becomes interesting because you're not just collecting data on cash. You're also collecting data on behavior. And that's where AI becomes important because now you realize this is what Anna is spending her money on, right? And this is why I can score Anna in a certain way.
I think that is so powerful. And listening to you, I was just thinking about how customer education is an important part of this industry because people, there's so many people who are like Anna who don't borrow because loans are bad, right? And yet, if they did, they would create this footprint that actually will enable them and unlock for them a lot of opportunities. So, I mean, an interesting thought coming through there. Now, to our person of Mashinani, because first we were having this conversation earlier to say, is this El Nino? Are these long rains? We're going to be cautious about what we call the rains, but for sure that is joy to farmers, I'm guessing. And when you think about, we talk about 70% of our country is backed by agriculture. Our economy is agriculture. Yeah. A friend of mine who once used to work with farmers said farmers are the most patient people, right, in the world. Because you put something inside and then you just have faith. And I tried farming and I planted potato seedlings and I harvested seedlings and I've never farmed again. So maybe you're going to restore my faith in agriculture. Question for you is, what opportunity do you see when it comes to this digital lending? What is the opportunity for us to accelerate our efforts? I hear these days we're importing everything, even food we're importing because farming is no longer the right financial investment for many young people. So what would you tell us as people like me on why should we invest and get money for farming?
Right, that's quite interesting, and I'll actually just pick up from what she spoke about alternative data, and I really like the way she's just put out the analogy about the product. It's lovely, honestly. And if I connect the two, and it's about understanding the customer. So if I look at alternative data and I listen to Anna about understanding the customer, and then we ask ourselves where our customers are actually spending the money, you actually do realize that data exists. So even before we talk about people creating a footprint for the CRB to collect the data and all that, we realize that people are we are still living. We've been living for the last X years. So we've been creating a footprint. So the question is, where do we get that data from? And if you go to KNBS, they will tell you a normal household spends across 9 different sectors of the economy. So which are those sectors? How much do you spend on each sector? That data is available. Another thing, some research we did a couple of years ago, we realized in Kenya, how do you get your invoices? You get it via text. So there are more than 40 million SMSs that go out every month to remind people of payments. What do those invoices talk about? They talk about how you spend, where you spend, and how much you spend. So you actually don't need to wait for CRB. You can actually tell who Anna is. So even if she hasn't borrowed, you should be able to tell who she is. So if I take it now back to a Greek and now create some context around it, the challenge that we're having, and that's why I think we're still at 10% digitization of some of these sectors. So if you look at agriculture, it's a $24 billion industry in Kenya, contributing close to 20% of the GDP in Kenya. But only 4% of it is actually using digital payments or digital lending. So you can see the opportunity in there. But what's the challenge? The challenge is that we are not going deep into the value chains and understanding what the challenges are in those value chains. And when you talk about a Greek, we talk about farmers. But people don't talk about guys called transporters, for example. A transporter is that guy with a ndudi who carries those 3 silver cans and picks the milk from the farmer to the processor. Nobody talks about it. How does he buy that ndudi? How does he live? Right? We're talking about the guys with picking macadamia from farmers and all those things. The agrovets and all those guys. So when you start understanding that whole ecosystem and how everything connects to each other all the way to the processor and to the market, you start now seeing all the gaps that exist. And so now from an agri-tech perspective, once you start now connecting these guys through tech, one of the things that emerges is that you actually bump into a treasure trove of data. I visited Nandi County and I saw a village size of, let's say, Westerns, and they were delivering milk worth $1 million a month. And when you walk into that village, it's so unassuming, you can't even tell this kind of value that moves in here. But the most important question is, what problem are we solving? Because digital lending is digital lending. It's just a product like any other, like a savings account. But the question is, what problem are you solving? And in agriculture, one of the biggest challenges is the farmer gets paid last. That guy, that's why you're losing hope.
This is it.
Exactly, because you put in a seed 3 months, and even after harvesting, you have to wait for that guy at the milk factory to process it, pack it, sell it to Tuskies, get paid, and then they decide when to pay you. So that's one of the biggest challenges affecting smallholder farmers in Kenya. And therefore now you ask yourself now, knowing that and understanding that this farmer produces X in this amount of time, and their produce has already been accepted by the processor, it's a guaranteed, banks would love that. Because that's a guaranteed customer who will pay you. Exactly. So what do you do? Once you find that now you layer a digital lending product on top of that. But now, then most importantly then is, how do we then democratize, lending? Because what's happening today is, Anna will come with a product, I will come with my product, and then I will start telling the farmer, come to me, I will give you a loan at X. But why are you sending a loan to the farmer? I've always argued that there is nothing like a farmer, or a teacher, or a doctor, or an engineer. There's always a human being. But once you understand how that human being behaves, one day is a farmer, tomorrow is a father. Yeah? So farmer gets paid last. Father pays school fees. So once you start understanding that context, then you develop products that speak specifically to how these people live and how they behave. And therefore, that is why I've always been fascinated about this thing I'm calling democratized lending, because what happens then is it disabuses this fact that you can only be lent money by a financial institution. So most of us here, I believe, have got 1,000, 2,000, 100,000, or maybe like Anna here, she's got more in the bank account. What then we're doing is you're packaging this data into a platform that says, hey, we've got 100,000 farmers in this place, and this is what they're doing, and this is what you're taking. And this is the gap that they have, and this is the amount of time that it gets to get paid. So as an individual investor, you can actually go in there and say, hey, I want to lend to that farmer in Meru because my return is 5%. Very clear.
Challenge you've thrown to say, as you understand the individual, you need to also understand the ecosystem and innovate around the ecosystem. Because unless you think about that whole ecosystem, you'll never be solving effectively for the farmer. That's so fantastic. Now, guys, I'm going to open this up. So if you have any questions for this fantastic panel, please start to prepare. George.
Migrate those 2G users to 4G, that 4G migration to smartphones, ideally. From a product perspective, what Samsung has done is that we have products from the entry. Moving on beyond that, we have all those products come equipped with what we call NoxGuard. NoxGuard is a software which is embedded in the hardware, so it comes ready. We have M-Copper. Actually, we have also partnered. We have M-Copper. Actually, we have also partnered with ABSA on the same. And I can say we have been at the forefront. Actually, we opened up this space of device financing. And in regards to credit rating, our NoxGuard is so, it's quite tested in terms of its penetration proof, meaning you can lower the credit rating off. We actually have certain device financing lenders who do not have credit rating on Samsung products. And we are proud to be, I believe, the sole manufacturer that is on the same. So in terms of access, we bring products that are device financing ready. We are now moving towards the consumer electronics division as well with the NoxGuard. So access to digital lending, I believe we from a product perspective or like from a manufacturer perspective, we want to open it up to a broader demographic, broader people and so on.
Yeah, and I think even just listening to you, on this panel I already see collaborations. You guys need to talk to each other.
There's a meeting after this.
There's already a lot of, and anyone here as well, because at the end of it, I think what Mike said earlier, the power of actually driving this whole industry is in collaborations. And it's about coming together because there's always something, somebody, and you know, when it comes to technology, it's about really understanding where are you competing and where are you collaborating. Yeah, and I think here there's a lot of conversations of collaboration. So I'm going to open it up to questions from the audience, and then I'll come back to you guys for your parting shot. Any questions? Yep, there's one over there.
My name is Naomi. I work at ABSA. Thank you very much for the very helpful conversations. So I have a question around what do you feel about the role of sustainability in this engagement and also around the ethical consideration? Because when you look at digital lending itself and the many players, there's so many players. Every year you're having graduates, also other people across the country who are trying to learn and understand. And before you try to understand one thing, there's a new face of something else coming. How do you move along with us in an ethical way that we understand so that we can also be able to just change the narrative so that the next generation of scholars and the young people, even to the other guys who are also trying to understand the digital lending space, to be able to make an impact across the areas around ethical considerations and the sustainability aspect in this conversation. Thank you.
Fantastic, thanks Naomi. Anyone in particular you want to start with?
Whoever is ready. Because I saw you discussing.
Anna was already in a small discussion. He couldn't hear. So let me repeat the question. She's saying, what is the role of sustainability and what, as lenders and as people who are in as part of that ecosystem, what are we doing with regards to the ethical considerations around digital lending? Because at the end of the day, again, back to what we were talking about earlier, right? People have been shamed. People have been taken advantage of. You know, it's just another person digitally. There's the guy in the village who takes people's money and takes advantage of them. Now this has all been digitized. So for people who are in the ecosystem, what is being done? What are you thinking, or what should we be doing to make sure that this is sustainable, especially with consideration of the ethical considerations? Yeah.
Ethical lending, there are two sides of the coin that you have to look at. You're looking at the consumer, the person who's lending, and then you're looking at the lender. And one of the things that we realize, even as we go into saying, when a consumer comes in to borrow money, how are they treated, right? How do they understand exactly what they're going for, yeah? So very often, our basic need is, I need money, right? But there's also the whole element of why do you need it and can you pay it back, right? When you're in stress, the only thing you want is to alleviate that stress and go out for the money. So ethically, from the consumer perspective, we need to be able to educate, right? Education is very key. What are you taking the loan for? What is your main, activity that would allow you to pay back that loan? It's not just about getting money, but can I pay it back? The third thing which I also find, and this is me personally, is to be able to communicate to the consumer every single fine print around taking that loan, right? So that they themselves understand, if I'm taking this loan against this provider, against that provider, what are they all offering, right? I have a friend who tabulates everything, right? Down to the percentage. And not even just the percentage, also, how did they make me feel, right? You want to also feel good about yourself. You don't want to feel like I am downtrodden, and that's how people borrow money. They borrow money when they're at their worst, such that when they take it, their thought process of how to manage that money they've just taken and pay it back is important. And why are you taking that money? Also important. I'll tell you this. There's a guy I know, very successful, who says, I make money off of other people's money. And he always used to say that. He was very successful. And I'll say who it is, God rest his soul. It was Chris Kirubi, right? He always said, when you borrow money, know what you're going to use that money for, and if you're going to make enough money to take it back. So instead of borrowing for bare necessities, what are you going to do with that money? And that's where education comes in, right? So those are the three things that I see from the consumer perspective, right? And that's when now you start talking about financial inclusion. Those are big words thrown out there. But how does it work positively for me as a consumer who's looking for money, right? And what is my mindset when I take it vis-a-vis my mindset when I need to pay it back? Those are very important. Then I turn on and I look at the lender. So the lender's in business to make money. Make no mistake, right? Whoever it is who's lending out money is in business to make money. So the interest, that's how they make the money. But it's how then you handle the consumer that is very important. Let me tell you what, the best people to lend you money, and I'll use this word here, are Shylocks. When you need the money, they're your best friend, isn't it? They'll keep calling you, telling you how they'll give it to you in 2 days, in 3 days, and so you get into it, and the one thing you forget to do is read the fine print. It's always there, right? So I actually had somebody complaining about how they needed 1,000 shillings to do something, 1,000 shillings, right? And when they went in and borrowed 1,000 shillings, they only got 800. And this person was in the throes of telling me, I hope you people have come as Faraja to sort that out. Because when I want 1,000 shillings, I need 1,000 shillings. That's why I came and borrowed 1,000 shillings. So it's also the education of, and when I sat down with that person and I asked them, what did you need the money for? Why were you going to, sit down? Sometimes the best thing to do is write it down, even as a consumer, understand, then go out and borrow, right? And if to a lender, the lender treats me well, educates. It's my responsibility as a lender to tell the person I'm lending to, these are the terms. And when you pay back, this is what is required, right? The fantastic thing about digital lending is that terms and conditions are all online. You can get to it and read it for yourself, right? And the fantastic thing about it is once you've done that, then you're able to determine whether you should be able, as a consumer, whether you go for this loan or this or this or that. So the choice is there, but it's all based on education. So how does it become sustainable? I'm a strong believer in being able to take what you're able to return back. Which means don't go and borrow a loan out of desperation. Because when you go and borrow it out of that desperation, even when it comes to paying it back, is when you find yourself stuck. And I think many of us as Kenyans, and anyone sitting in this panel who's lending right now, knows what the NPL is like. Non-performing loans can go very high, and especially in the digital space. So when it becomes sustainable is when people are aware and are educated. So that's, I advocate strongly for that education, right? It's good to tell me here's the loan, but how do I use it, right? I will hand over to him because he'll give the how.
Yeah, and,
Yeah,
and
actually-
another point that you've just sparked before it comes to you is, as we educate, and I always find it interesting, when you're doing your marketing and your consumer phasing, it's very consumer. If I'm selling to a farmer, I'll speak in their language. When you look at the terms and conditions, like you need a PhD in law to understand. So maybe part of the ethical considerations is how do we communicate those terms and conditions
Simplify.
in the same way, simplify. Speak to people so that somebody can actually make it, because sometimes it's lack of an awareness that gets people to make the wrong choices. But it was not, the way it's structured, they would never have understood anyway. So back to you and your farmers, what do you think?
Okay, I will talk broadly now.
No, speak about it.
I will wear my hat as part of the FinTech Association, and I also served as a board member of Digital Lenders Association of Kenya. And I've also been an MD of a digital lending company. So looking at that from a regulation perspective, because like Anna said, when a customer wants a loan, they want a loan. But what is your responsibility as a lender? And I know in banking, because of course they've been going through regulation for a longer time, they have got this rule of think about a third of your gross pay or something. That doesn't exist in digital lending. If you look at the DCP regulations that govern digital lenders in Kenya, because now you need to have a license, if you look at the regulations, they talk about the pricing. They talk about how you handle your consumer. They talk about data protection. It doesn't talk about over-indexed customers. So it's not anywhere in the regulation. When we met the former central bank governor, because he was really passionate about the users, one of the things that he spoke to us about was how can we create standard as ourselves within the organization that we work in. Because, you know, we cannot throw regulation on everything. Media owners have their thing, bankers have their thing, engineers have their thing. What's happening to the fintech industry? How can we, as an industry, come forth and say, hey, when we look at data and see that Winnie is over-leveraged, why should you go ahead and lend that person? Because that's irresponsible lending in itself. So as much as we need to look at the customer and the customer can say, hey, I can't pay or I can pay, as a lender, your duty is to look at the data and ask yourself, you can actually tell beforehand if Winnie can pay or not. So, but if they don't do it by themselves, there has to be a whip that has to be cracked. So I think there's a gap in there as a digital lending industry, as a fintech industry, just to come together and say these are the standards within which we need to operate in. And anybody who does not uphold those standards, then they're kicked out. Because we did it with the guys who've been calling relatives and all those things. As a Digital Lenders Association, we went straight for those guys. And we actually worked very well, even Safaricom supporting us in disabling those payments. Because they are the ones who are causing the problems for the rest of us, right? So we can also do it in terms of over-leveraged customers by educating them, but also reminding them, hey, I can't give you this loan because of 1, 2, 3. You've taken Mshwari, you've taken Timiza, you've taken Faraja. Dude, pay that first, then I'll be willing to lend you.
Yeah, and I think that's really, again, goes back to collaboration.
Yep.
Because at the end of the day, there's what you must do as an individual organization, but some things when it comes to ethical consideration, upholding the ethics around digital lending, then at the end of the day, you have to do it as an industry and as a collective. Last comment from Michael.
Yeah, probably just to summarize also for what Munyi and Anna have just said, we have to always remember who we're doing this for. It's for our clients, right? And we don't want a one-off instance where you come to me and then you never come back again. So another part about the sustainability is building products not only for, but with your clients, such that you can get a repeat client over and over and over again. If you look at a company like Starbucks, that's a company I like to look at, right? Just from a perspective of repeat clientele. If you look at the lifetime value of a customer at Starbucks, in terms of dollar value, they spend thousands of dollars over a lifetime. And a cup of coffee is like $10, $20. For us, the most important thing is to sustainably work with our clients. Get that feedback. Hey guys, your pricing, it's a bit high. Do you mind? Can we talk about it, right? Is there a way we can have more flexible payment options across the board? And there's no way we're going to have sustainability or ethics if you're not thinking with the customer in mind. And back to what Munyi said, like, don't over-leverage your customers. It is our responsibility as the lenders to actually think on your behalf. Where you cannot see it, we must do it on your behalf. And probably go over and above and say, this is also what you can do if you want to get that credit, right? You need to probably clear off one loan, second loan. Once you're done with that, you can come back to us. or this is also how you can build up your credit score from a point of view of getting to, maybe like Anna said, she had no credit score, but you can do X number of things to get to a point where we can actually leverage and make you enter our ecosystem.
Yeah, and I think the powerful thing there is for your business to be sustainable. The why behind sustainability is if people don't understand, if they're being bullied, they will not come back to anyone. Yeah, so the reason why, again, you must do it is because sustainability actually is great for it's good for the customer, and it's actually good for the business and the industry. Thanks, guys. Yep, there's another question here. There's 2 more questions. I know, Rita, we are running out of time, but we'll have the 2 questions, and then I think we can wrap up.
No, it's afternoon. Good afternoon. Yes, my name is Eva Gashoki. I am a lawyer in the fintech and digital finance space and also a farmer. So for purposes of my question right now is to Mr. Munyi. You spoke about agribusiness and agritech. Being a farmer on the ground, one of the main challenges that faces farmers where accessing capital is most of the loans that are offered as if they're being offered to a person who receives a salary at the end of the month or this business income coming in. As a farmer, most of farmers, their produce is on the land for close to 90 days. And every week, there is input that goes into the farm. There is agrochemicals, there is fertilizers, there is irrigation, there is labor for all that. So if you give a loan to a farmer and they're supposed to make repayments maybe on a monthly basis or a weekly basis, they have no way to get this money. So it's not like a salaried person. This salaried person at the end of the month, there's a salary, so I can actually manage to make the monthly payments. But for a farmer, I can only access money at the end of 90 days. And like you said, being the last person to be paid could be even after 100, 120 days. So there is that gap that exists. I don't know if you're looking or have anything that addresses that, because that is a common challenge with the farmers.
Yeah, thank you. And I had earlier alluded to it, and this is what I call contextual lending. So your traditional lending product today is one-to-one. I lend you for 30 days because you get paid in 30 days. But in agriculture, it's different. I will lend you when you need it, you will pay me when you can. And that's not what's happening with the traditional products. And how do you then create a product that works that way? Is now because when we start, what you do is you come in with an agri-tech platform that essentially now maps the journey of the farmer all the way from inputs. How do they get inputs? What do they cost? And from what their activity is, their acreage, their production, their quality, and all those things. Then you map it all the way back onto the processor. And then you look at the time span for all this happening. So when you take that into consideration, then you ask yourself, how do you manage risk? So risk comes in 2 ways. Risk can happen when the crop is growing like hers that never germinated, right? But also risk can be in the sense of this crop failure. Yeah, like now there's El Nino, it's a good thing, but there are floods as well. So you can get flooded. So from a risk perspective, you're looking at crop insurance. But also from a risk perspective, also you're looking at what if you don't produce as your quality is on this percentage, and this is what is going to be accepted, and this is how much is due to you. And because your produce has been accepted by, so I take that as collateral, and therefore I give you your money, and you can stay as long as you want with it. Because I'm 100% sure there's a process of this and it's going to pay me. So we have to do the hard work. And I was speaking to her earlier in the morning and I was saying, the challenge with fintech, lending, payments, all this digital stuff that we're talking about, we don't want to do the hard work. We want to come to Anna who's got a job at Barclays with a pay slip, ask for the pay slip and lend and move. But the real money is where all this fragmentation is happening, like Ali was saying, for ground. And you have to come in and connect all these things and understand all these nuances for now people now to provide products like the one you mentioned. So yes, that is happening, but a lot of work has to go into connecting the dots so that we can find where the gaps are and then we can address it to a product that serves.
Technology can do that for you. So the amount of hard work or money, investment required to get all this information is actually so much easier now. So it's about how do you leverage technology to do all these things that we're talking about. And I think that's the power of where we are today. Thank you for that. Anyone else wants to comment, or we can go to the next question?
Okay, my name is Isaiah Opio. I work with one of the credit bureaus here. I see some of my clients in there. And I just want to paint an analogy. Assuming that you had a farmer down there and every time you give him peanut to actually plant, he actually consumes them. You give him peanut, I want you to actually plant these seeds around here, but you'll find that he's actually consuming. Only very few get to be planted. What you do next would be, you'll go for treated peanut seeds, so that he gets to know there is a danger, so that to safeguard your interest. What do I mean? From where I sit as a product guy in one of the credit bureaus, what I'm seeing is some of our lenders here are giving the consumers the peanut seeds to plant. So what do? They consume. What do I mean? Most of you are consumers or borrowers out there. They're actually borrowing from one lender to pay another. Hustler Fund was launched. Immediately it was launched. The first phase was to pay. Unachukua, unalipa hizi mafuliza and on. And what does it speak to, especially to the topic of rethinking digital lending? We must go back to purpose-based lending. And I love what is just said, device financing. And let me actually paint a picture as well. Today, and I'm actually opening your perspective in regard to this, NHIF, the number of dormant accounts in NHIF is so high. And for you, remember that is a basic need. For you to get treated when it is already passed, unaambiwa penalties, leave it for some months for you to do that. Why not think around, how do I enable Opio, whose NHIF account is getting into arrears, to be activated for 6 months, for the entire year, then he pays me? Because the moment you give me 2,000 bob, fuliza iko hapa, nataka kulipa fuliza. And I'll tell you from where I sit. Most of your borrowers are actually taking from Peter to pay Paul. And then the next time picks from Paul to pay Peter. All that is what is going on. And from your books on the other side, like we are doing well. You are not doing well. These guys are using the same, borrowing from this other side to pay this other side to pay this. It is high time, especially when you talk about rethinking digital lending, to think about purpose-based. Device is one of them. So that we don't give cash. Let us not give them the peanut seeds to plant. They're going to consume. And I'm coming back to Othoro here. Looking at the way the industry is, consumers are never rewarding. They don't. They don't. Hustler Fund right now, delinquency is quite high. It is obvious, it's in the papers. But when the government came like, you know what? We want to arrest high cost of lending, lending out there. We want to give you soft loans that is not going to be hakuna CRB checks, hakuna this maneno mingi. What is the delinquency rate now? And I would want us to compare notes 1 year from now, Faraja, 1 year from now. In a situation where you don't charge them anything, you lend them money, they bring the same, exactly the same amount. I want us to compare notes 1 year down the line. In regard to, are consumers rewarding the way we think they should be rewarding? Now that we give them money for free, they pay us back the exact amount without any interest. Are they that rewarding? Because a lesson from Hustler Fund shows that they are never rewarding. They'll take that money, go out there, spend it. You ask them, they feel it's a bother. Lastly, fraud. Whether we're not talking about, because delinquency is going to be one of the costs you'll face, one of the element costs. But on the other side, there are so many fraudsters, starting from Mulot here. You know Mulot is, every fintech knows Mulot, where Mulot's. Have we factored in that part of the process? And also let us agree, we need to build, I know we've been talking about alternative data, and I agree with you. Most of the guys who have never borrowed, you look for them in the bureau, you don't find them. And today, if we challenge you, now, can you start sharing data so that it is hosted for your benefit? Everybody wants to work in a silo. And I know most of my clients are here. Everybody wants to work in silos. And so, when you talk about the same thing of rethinking digital lending, what is this purpose-based lending other than device? Because device right now, every solar company wants to get to a device. And I love what the Samsung guys are saying. You don't even need to look for client. Go out there and look for anybody, talk about solar. Those are your potential clients, or even merchant down there. Because that is exactly what they're doing there. They started selling solar, kila mtu amekuwa na solar. Now, phones. And by the time we're doing device financing, it is a floor set. Those guys are not using it to generate money. It's like, I just need to have a smartphone to actually chat. TikTok, that is what it is. So, in all, I agree with you, collaboration is key, sharing data is key, but just take that angle of seeds, you give them peanut seeds to plant, at the end of the day, you'll not have anything to say. But thanks so much. That was a good insight. I really love what you guys are saying. Thank you.
I was going to say, I think you should have been on the panel. We can get you a chair. So thank you. I think,
thanks.
Yes, so
Let me
a couple
just
of
respond.
good provocations there. I think Anna, I think Winnie, from an alternative data perspective, can also make a comment.
Mr. Opio, actually, yeah, you should have been seated somewhere here. Because there's the other element of, we've not rubbished credit reference bureaus. In fact, they do have a part to play. What we're saying is, in rethinking what other behavior do we need to score? Because we've got the standard scoring of delinquency, block, period. What else do we look at? And I am a year down, actually. We didn't just launch the other day. We've been in the market testing and piloting, and we've gotten to understand the consumer and some of the consumers and what they think. There are those that you can't help, right? And we know them, you know them. They're taking loans all over the place, and that's it. For them, it's free money. And that's why I said, education is one of the things to begin to change the mindset of those people who are borrowing, that this is not free money. And when you get money, don't eat the peanuts, right? Take that peanut and plant it. And what does it do for you? It grows. And that's where I come into where he's talking about. And therefore, after it grows, you're able to get a reward, a harvest, right? That kind of thinking. But the truth of the matter is, we will continue to use the traditional scoring methods, but I think my challenge is, how can we score better so that we know those guys who are just overextended and not keep giving them money so that we keep them totally beholden unto us, but to create a consumerized environment where people are consuming and returning back.
Thanks, Anna.
To you, Opio, the question of loan stacking, borrowing to pay another, is easily solved by AI. Just adapting AI models, you're able to score real time, so you'll know when somebody is borrowing to pay. So alternative data helps into that. About siloing of data, everyone is holding on to their customer, to their own customer data. So as an ecosystem, if we start thinking about open banking and sharing data amongst each other, collaboration, we can get there. But from where you sit as a credit bureau, are you going to be sharing with us data to be able to enhance what we do? Because it's not one way.
Okay, now you guys can have an offline.
Just 1 minute.
Before you comment, just one more comment.
Sorry?
No, I'm saying I think there's a follow-up conversation, but we'll let, but I think go ahead.
Yeah, very quickly, Opio. I think, for me, I think there's an opportunity to evolve what we are calling credit reference bureau. Because if you ask somebody what is a reference bureau, it's somewhere where you report it, right? How about, and when you go to a credit reference bureau, if as a lender, you're actually going to look for a reason why not to lend somebody, as opposed to a reason why to lend somebody. So the way I look at it is two parts. One, can we evolve how we look at credit reference bureau? In the sense that, can you spend time understanding the customer first? Not to wait when they're borrowed and they're being reported. Understand the customer, and there's a place we can point all of us to start. We have a unique space opportunity as Kenyans, because we've got one of the best digital infrastructures in this country. And this is in the IPRS, right? If you go to other countries in Africa, these things don't exist. We're lucky that it exists and even has APIs you can integrate to. Number two, our mobile phones, your mobile number, it has always become synonymous with a unique identifier. And I spoke about invoices going out via SMS. What does that tell you? It tells you that if you get somebody's mobile number, you can actually mine a lot of data about who this person really is. So a challenge back to your PO is, I want next time when I integrate you like I have before, and I look at your data, I want data about Anna and tell me where she spends her money. Don't tell me about the loans she's borrowed, because that's not Anna. Anna is the person that spends the money on a daily basis. That is what I want to see from a credit reference, because that's a thing that will enable me to now create that purpose lending that you're talking about. Because if I understand she's got a DSTV bill, a water bill, whatever bill, now I will go to those service providers and say, hey, I do not only want to partner with you, I want to partner with you because I know you have X number of customers who spend X number of money on you in this frequency, and here are their names, and here are the limits that I want to lend them. We need to get that deep to understand the ecosystem before we start building for purpose lending.
Opio,
Yeah.
a comment?
Okay.
A final comment.
Final. Thank you. So, the evolution of credit bureaus is not the blacklisting. Those ones we've left for the traditional ones. When you get to the bureau, remember, when it's in any lending ecosystem, there are two things that are quite key. Number one, the willingness to pay and the ability to pay. All those two. Any lending, those two. So when you're coming to the bureau, in terms of the willingness, we are telling you what is the probability of default. And that is not to deny that guy the loan. Now, that actually speaks to what we call risk-based pricing. So that when I'm lending to you and I know the probability of you paying me back is only 40%, I'll still extend the loan to you, but tell you I need the following collateral to back up, to actually safeguard myself. On the side of the ability to pay, we also inform, like for instance, digital lenders. I've seen digital lenders when they join the market, we're like, they want to give 10,000, 20,000 to people they've never met and all this, they've never interacted with. No. When you come to us, we give you what is the ability. And here the ability, we are going to tell you in terms of, let's say for instance, Isaiah. What is the maximum principal has ever been given in terms of that digital loan? Or the digital loan so far? What is the average? What is the last one it was given? So that you don't shoot in the dark. So anybody going to the bureau just for the sake of to check whether they have been blacklisted, I think that is a new lender in the market. They are not supposed to be even existing. They're supposed to go out there. Now, what does it mean to this ecosystem? One, remember, being a regulated institution, it means unauthorized data access is not allowed. There are so many times we felt like, because at one particular time we were having this conversation where we are saying the most predictive or source of data about anybody is the spouse. It's the spouse. Then the second is the credit bureau. But because the spouse cannot come and report the data because it's unauthorized, we then stop at that particular point. And when you talk about alternative data, now we are talking to you guys and say, Winnie or Anne here, instead of just lending and keeping it to yourself, the ecosystem allows you, and even scrapping of data, the ecosystem allows you to get that information from a credit bureau. In terms of scrapping data and all that, today Data Protection Act manenos, email letter, shida mingi sana. But like you say, our next move is not going to be this data that we get. Our next move right now as we speak is about alternative data. In the next 3 years, we will be one of the sources of alternative data. And this is not actually to chest thump here. But what I'm telling you, yes, there is need for us to actually work about rethinking digital lending. Let us not just give free money. Consumers are not rewarding. I'll tell you that for sure. I've seen lenders who've come generously, giving good limits and all that. After 1 year, they tell me, oh, Pio, kumbe, these guys were just fraudsters. These guys were just not willing to pay. I don't even know what to do. And collecting a digital loan, especially under this new regulation of digital credit providers, you send them texts, 1, 2, 3. The next time they say you are threatening them, they go and take you back to the regulator. But thanks so much, guys. It was such a nice conversation.
Thank you so much, Opio. And we've really run out of time. So I think that was Opio's parting shot. I'll ask everyone 10 seconds. Parting shot, starting from George. What would you like anyone here to, if there's one thing they should live with from your perspective?
I think during this economic downtime, I think let's be open towards, I speak from a device financing point of view, let's be open towards device financing. I think we can really leverage on that in that digital migration, which is ideally access to technology. Yeah.
Fantastic. Thank you. Michael?
Yeah, I echo George's comments. And my word for the day again, collaboration. Right? I think we all need to collaborate together in terms of data sharing as lenders, in terms of device financing and merchants, and alternative data. So I think we have that collaborative point. We're going to continue to see that growth.
Fantastic. Anna?
For me, collaboration, yes, but I also think because this space is very dynamic, it's constantly changing. How do we change with it? How do we use data in this data privacy era that we are in to build up products, innovative products that our consumers will be able to interact with, and most importantly, not be delinquent. And I'll just say what I do at Edomex. I'm the business lead in charge of strategic alliances, usage, and retention.
Fantastic. Thank you.
Two quick things for me. I think before we build the tech, before we build the products, before we send out the loans, I think let's first start by understanding the customer, and the data is available. And the last one bit is one bit that the former governor spoke to us about that he called the social license. And essentially the narration was about, we've got all these guys who are licensed, DCPs and whatever it is and things like that, and it's good to be licensed. But he said the most important license is the social license. Is do your customers trust you? That when you offer that loan and you say this is what you're charging, that actually that is what you do. That's what he talked about, social license, embedding trust in the products that we build and actually delivering what it is that we say that we're delivering to our customers. So for me, I think urging all of us to think about our social licenses and how our customers look at us and if they actually believe us.
Fantastic. Last but not least.
My parting shot would be for any businesses not considering alternative data for decision, you're leaving money on the table and you're also not serving most of the customers you need to be serving. So we need to be open-minded. It will help with efficiency and be able to do real-time scoring. So be open-minded to alternative data, then you'll be able to capture the other segments. And yeah, that is it for me.
Fantastic. My parting shot is I've learned so much. Thank you all. I thank you for being a vibrant panel and a vibrant audience. Thank you for nodding and smiling and keeping us interested as well. And I think I've learned two things today, that we need to all challenge ourselves on how well are we leveraging technology to understand customers' willingness to pay and ability to pay. Because if you do that, and you do that well, then we'll do what's right for the customer and what's right for our businesses. Thank you very much. Another round of applause for these guys. I'll hand back over to the MC.
Thank you very much. Thank you very much. Another round of applause for Caroline, Kendi, and her panelists. Asanteni sana. Good job, good job. Thank you, Anna. Dude, I know you. Thank you, Caroline. Thank you. Another round of applause for our panelists this morning. Rethinking digital lending, and I could see the kind of interest that topic has generated, and probably we should try and get another session for continuation of the same. So yes, quick points. As we're just about to invite our third panel to another discussion. So they talked about issues of protecting both the business and the consumers, ensuring dignity in this space of digital lending. One interesting thing and a solution here, use of AI, alternative data to collect, verify, and analyze data to inform credit, rethinking the credit scoring system to be more inclusive, understanding the ecosystem towards resolving some of these issues, product-specific lending, like what the gentleman from Samsung was offering, and finally, ethical considerations around digital lending, definitely something and discussions that should continue, including the need to have industry standards and not over-leveraging the consumers. So that has been our second panel this morning. Our third panel will be discussing Customer Grand Slam, Hitting Tech Home Run. Hitting the Tech Home Run, and this panel will be moderated by Alexandria Akena, who is a consultant with Asoko Insight. Allow me to invite Alexandria onto the stage. A round of applause for Alexandria. She makes her way to the stage. Now, Alexandria is a seasoned venture builder with over 8 years of experience in the African tech industry. She harnesses technology and innovation to drive positive impact, helping businesses thrive in the digital age through exceptional customer relationships. Alexandria excels in developing and executing customer-centric strategies that pave the way for long-term success, satisfaction, and business growth. Alexandria, over to you to introduce your panelists and invite them onto the stage.
All right. Good afternoon, everybody. I think I'll take this off. It's better in my hand. Yeah, so good afternoon, everyone. Thank you so much for being here, especially on a Monday and a Monday in December. So I will call up my panel. I think they should just all come up and then I'll introduce them while they're here. All right, fantastic. So our session today is Customer Grand Slam, hitting the tech home run. And while we're talking about two different sport references, we are not confused. It was just emphasis on wordplay, and the emphasis here is on the customer. That's what we will be discussing, because any customer in any business is make or break, especially in tech-enabled businesses. So I'll start the session by introducing the amazing panel sitting right beside me. I'll start with KT. He is the CEO and co-founder of Baki Beauty. And an interesting fact about him is he is the only child of his parents, but has 200 cousins. So, we're in Africa. So KT, welcome to the panel. Tell us something about you and Baki Beauty.
Hello. All right. Hi, everyone. My name is Kwenui Tawa. A bit of background about myself. Started on the investment side in private equity and in distressed investing in New York before I moved here about 7 years ago, where I helped set up Jumia Kenya on the cross-border side. And then after about 1.5 years at Jumia, joined Wasoko, where we grew Wasoko from about $3 million a year in revenue to over $300 million in about a 3-year period. I stepped down from full-time management at Wasoko last year to focus on some consulting work, where I helped Good Life grow into the e-commerce space. From my work with Good Life, that was where we birthed Baki. And Baki is a Black-focused beauty business where we enable consumers like yourself to be able to get access to concierge retail experts. So we have experts in skin, in hair, and nutritionists. And we think about beauty more broadly than just cosmetics, but we think about beauty in terms of your wellness overall.
Thanks so much, KT. On KT's right, we have Stella, and she is a Senior Director of Customer Experience in Beyond Miru, and she is a sweet lover, and she's obsessed with Haribos. That's an interesting fact about her. So tell us a bit more, Stella.
Good afternoon, everyone. Thank you so much for the introduction, Alex. It's a pleasure for me to be here. So as Alex mentioned, I'm the customer experience champion, so to say, for a company called Biomerio. It's a bit difficult to pronounce. It's a French company with our headquarters in Lyon, France. and we've got, we're in the biotechnology space. So basically what we do is we manufacture and distribute equipment that is used for diagnostics in private labs and hospital labs. So when you go to hospital, you're not feeling well, and the doctor asks you to get a test done, you go to the lab, they need a sample. That sample is going to be run through this particular equipment, and the clinicians will be able to know what's ailing you and prescribe the correct medication. So that's what we do. We've got global presence in North America, Latin America, Asia Pacific, Europe and Middle East, and Africa. So I am currently running with customer experience for the Africa region, tasked with deploying customer experience strategies that will enhance our customers' experiences. So I've been in bioMérieux for 3 years. And before that, I have about, I know I don't look it, but I have about 20 years being a customer experience champion. I have worked in the telecommunications industry for Safaricom and Telkom Kenya. I think about 8 years in total. I've worked in renewable energy. I've worked in hospitality, ICT, and a number of other industries. So thank you again, and looking forward to this discussion.
Thanks, Stella. Up next is Grace. She is the Director of Operations at Boss Money Africa, and she is a seasoned speaker in a couple of events. Actually, just recently, if anyone is interested, she met Idris Elba.
Oh, wow.
Right.
You get an autograph?
No, I got a photo. She got a photo. She has evidence. If you follow her, you probably see it. And a fun fact about Grace is she is impartial. She doesn't have a preference for cats or dogs. She loves them both. So Grace, tell us a bit more about yourself and Boss Money.
Okay, check. Oh, thank you. So let me just get this thing off. Hi, everyone. So my name is Grace Anyete. As Alexis has mentioned, I'm currently the Regional Director of Operations at Boss Money. Boss Money is a product of a publicly traded US financial telecom called IDT Corporation. What we do is we enable for remittances, so US to across Africa, UK to across Africa, Canada to across Africa, and then also last year into this year, we started enabling for a blockchain-based wallet that allows for users to hold multiple currencies. So that usually allows for easy cross-border movement of money, and that's one thing that we really want to solve for. We're really proud that Kenya is finally taking a hit and starting to work on laws that will govern how blockchain runs across the country. So I'm really excited to be part of this conversation, and thank you for having me.
Of course. And last but not least is Gerald Black. It's in his name. His fun fact is that he's always in black, and he's on brand today. He is coming to us from Anchor, and he's the head of Go-To-Market. Welcome, Gerald.
All right, thanks a lot for having me. Like she mentioned, my name is Gerald Black. I used to be a founder, now exited, thankfully, because building is very hard, and I do not envy founders at all. But right now, I head go-to-market at Anchor. Basically, we provide banking as a service offerings to people that are looking to launch financial products. And for those who don't know what banking as... I think it's echoing from this one. All right. So for those who don't know what banking as a service is, it's basically offering you all the infra that you need to launch financial products. By the way, it's my first time in Nairobi. I came from Nigeria, and right now Anchor offers its services in Nigeria. So if you're looking to launch a financial product, basically you don't have to worry about building APIs and building the back end. You can just basically integrate our APIs. We're offering you the compliance you need to launch that product, all the tools you need to issue accounts, generate transfers, money movement, and all of that. Everything you need to launch a financial product, we offer it to businesses or companies looking to launch in Nigeria. And then I also manage a community called Black Ops. It's a community for top operators in venture-backed startups across Africa. Katie here is also a member of Black Ops, and we recently had our homecoming event in Nairobi. I think that was 2 weeks ago. So thank you so much for having me.
All right, so we are in fantastic company to start our discussion today. And I think I'll kick off with the fact that there are so many different industries represented on the stage, you know, from cosmetics to biotechnology to remittance, banking as a service, fintech, I guess, in general. But one thing that we do have in common is the need for customer excellence, and we think about our customers as we launch, as we build. So I want to start from there. A good example is, for example, Uber. In the different markets, when Uber launched, it was just a blanket application. But then with embedding itself more in the market, they have more tailored options for every customer. So here in Kenya, you can top up your Uber wallet like directly from M-Pesa. That is an innovation led by customers. So I'd like to start there and ask Katie, you know, in the cosmetic space, what are the things you're seeing in terms of optimizing customer journeys to fit your industry?
Thanks for the question. Is this better? All right, this is much better. I'll use this. So thanks again, Alexis, for the question. So I think, firstly, one of the big trends that's happening globally in beauty is the shift away from a one-size-shoe-fits-all to personalization, right? And this is happening at different points in the value chain. First and foremost, this is happening with disruption of your beauty manufacturers. So a number of you may have already heard of them. There's a company that I'm grateful to be an investor in called Uncover, who's helping lead this, for example, here in Kenya, where Uncover has curated skincare products that are exclusively made for black skin, right? And so I think, number one, that is one big trend that is happening is we are hearing the voice of the customer that the products that were made for a US market or what's made for a Chinese market or Korean market is not necessarily what is best for a Kenyan consumer. And so I'd say that is one trend that is happening. And you're seeing local solutions be built up in order to address that. I think the other trend, and this is where Baki plays, is at the retail level, right? Too many times and so many stories you hear of people going to a beauty retail store looking for a particular product for their skin, and they just get sold whatever is the most popular product on the shelf with no regard for, is this the right product for you? Right? And so a lot of what we focus on at Baki and the innovation that we're bringing at the retail point is initially focusing on helping you as a consumer understand yourself. What is your skin type? What is your hair type? Do you have a scalp concern? What is the right product that is for you? Right? And so personalization is a new innovation that is happening at the retail point. And I think a lot of it is being driven by better access to data. Right, and so I think data is a big trend that is driving that. And I think overall the theme that I would say that is driving the beauty space is personalization at every point in the value chain.
I'm a really big fan of Uncover, so it's great that you're here. I don't think it's working. Yeah, so it's really great that you're here. Speaking of personalization, you know, you've talked about individuals as a customer as well as retailers. So that's both a B2C and a B2B approach. I think it would be great to hear your feedback, Stella, on how optimization of a customer journey applies to the biotechnology industry.
Okay, so in terms of the biotech industry, we are a bit late in implementing a lot of the customer-focused technologies that drive exemplary customer experiences. So you'll find where, you know, in a different industry, I was deploying support centers or call centers more than 10 years ago. I'm doing that now in my organization. You know, a lot of other technologies as well, you know, we're just starting to adapt. So basically, what's been happening is that we've got the equipment that I mentioned, we're marketing it or selling it to laboratories, and our marketing initiatives are not your ordinary marketing initiatives where you've got this equipment on billboards. I don't think anyone has ever seen lab equipment on billboards. We're not gonna send you SMS blasts as a clinician. We're not gonna send you email campaigns, but our marketing teams will have to go into the hospital, speak to clinicians, that's doctors, pharmacists, lab technicians, and basically anybody in the hospital, talk about the different equipment in the immunology space, in microbiology, molecular biology. I've had to, go back to my biology books from high school just to try and understand, because I don't have a medical background myself. But so our customer journey has been very different. That's how we do it from a marketing perspective. And then in terms of customer service, the teams that are tasked with driving customer service are the field engineers, incidentally. So that's who ideally the lab manager or the lab technician is going to call for support, which is, it's different. It's not necessarily been a support center. We've also just recently started to get into e-commerce, so this is a very new space for us, making sure we are now starting to sell reagents online, making sure that through the same e-commerce site we can be able to offer customer support, because we've integrated our platform with CRM, so customers can log in their complaints. So we're, trying to refine this customer journey. As I said, right now, we're deploying support centers. So you have to look at a customer who is used to calling an engineer. You're now telling them, rather than call your engineer, because we want to make sure that the engineers are focused on the task at hand. If the engineer is at a hospital fixing equipment, keeping in mind that for us, making sure that equipment is working efficiently could, have an impact on patient lives. So you want him to be focused on that and not to be on call at the same time trying to resolve another customer's issue. So we're trying to streamline that particular touch point. We're trying at the same time to drive self-service through the e-commerce site that I mentioned. At the same time, we are looking for customer feedback. And what we've been doing in the past is we will send our customers a survey, or actually just have a company calling them maybe once every 6 months to ask them, so you interacted with us, say 6 months ago. How did you find your experience with us? And even you as customers, you're likely not going to respond to an organization that's asking for feedback on your experience for an interaction that you had with them, 6 months ago. So we're trying to bring in platforms that we integrate with our ERP systems, our CRM systems, so that we're able to get customers at the point of interaction with our organization or with our teams or with our products, because we believe that if we get the customer at that point, they're more likely to give us honest feedback on their experience, and we're also more likely to manage detractor feedback. That's feedback from unhappy customers in real time, and effect service recovery strategies in real time. I hope that answers your question.
Yeah, it definitely answers my question, and it just brings to the forefront the fact that customer journeys look very different in very different industries. So I'm pretty sure Grace's contribution will be very different, because in a fintech space, in particular in remittance, this is a more tech-powered business. The interaction is less physical, and the delivery is via APIs or apps. So I'd like to hear your views, Grace, on how this applies to your industry.
Okay, sure. One thing about the customer, just like Katie had mentioned, is that you have to really consider personalization of each country that you get into. And with the rise of mini apps it first started in Asia Pacific, and now it has grown into Africa, and even Safaricom is pushing for the mini app solutions within the app. It's become a need because customers want a space where they can come in and they'll find everything that they need. So, and in as much as we can offer remittance services, we need to think about, can I offer payments as well? Can I offer a virtual card inside there? Can I link it to allow them to buy goods and services? What additional features can I have for that particular customer? So there's that rise. They want everything in one space. The other thing that we have got a chance to see is the real-time transactions. And this, I honestly blame Safaricom as a Kenyan, because you are used to things happening instantly. Like if I send you money, you will get a text that immediately you have got those funds within your account. So that's another thing that customers really push for, that real time, and then they want quick ways to get access to your app. If I have a 10-step process just to access your app, then most likely I will not take it. So how can we, even as fintech players in different spaces, how do we think about that even as we grow solutions for our customers?
Thanks so much. I think Gerald has a similar viewpoint. When you're building infrastructure for other businesses to build on, there are a lot of things to consider. So I'd like to hear what those considerations are.
All right, thank you very much. So I would like to take a step back first, because we play a lot in the B2B space, right? Now there are two customer segments. There are the customers or the businesses that are looking to launch, and then you have the businesses that are already launched but are looking to integrate a layer of financial service. Like let's say, for example, Katie's e-commerce platform wants to issue wallets to customers, right? Because you want customers to top up the wallet and pay seamlessly from those platforms, right? So for the customers that are just looking to start from scratch, it's our responsibility to first off ensure that we're able to position ourselves as leaders in that space, right? So when you're thinking about launching, you're thinking about Anchor, you're thinking about a banking as a service provider, because it makes it easier for you to just start, right? So that's why we have to invest in a lot of communication, because it's also sort of new in this space. It's not new, right? The concept is not new, but in Africa, in Nigeria, and some other parts of Africa as well, it's a new concept. People are just beginning to understand what banking as a service is and how banking as a service can help you launch quickly, right? So there's a lot of user education, both online and both offline, in terms of what you're putting out there, and even hosting founders or hosting budding entrepreneurs coming together that are interested, and educating them on how you can, offer or support their services or their businesses. And then for the other segment, like I mentioned, which are already established businesses that are looking to integrate. Now, it's a bit different, right? Because you have to sit down and look at those companies and identify yourself, because in a lot of instances, some of those companies don't even know that these opportunities exist. They don't know that, you can unlock new revenue streams by offering some add-on services like data, bill payment, and all of that, right? So it's also our responsibility, especially for the office I sit in as head of go-to-market, to look at those companies. So who are the top companies that are out there? What are they doing? And how can we support them to unlock new business offerings, new service offerings, and help them also generate more revenue for their businesses, right? So basically, especially at the PMF stage, it's a lot of conversations, because we've had instances where we're literally building a service on a conversation that has been had, right? So we're sitting down with you, and then you're telling us your use case, and we're brainstorming. So we're looking out for what are those opportunities that exist, and then I'm taking those conversations back to our product team to say, hey, I had a conversation with Baki. This is what they need to help them move to the next level, right? So it's sort of different with B2B, right? Because you have to understand the business, you have to understand the use case, you have to understand the value that you bring to that business and how you can help them unlock. Because it's not just enough to tell them, oh, integrate a new product. You also have to help them find out how that new product can help their business succeed even better and generate more revenue. So those are the differences that I wanted to outline.
I'll just jump in and add something, just piggybacking off what Jared and Grace were hinting at. I think an interesting trend, especially in e-commerce, is a move towards more increased specialization, right? Where, if you recall my intro, about 7-10 years ago, you had the rise of platforms like Jumia, where we are a one-stop shop for everything. right? And now you're seeing increased specialization with, companies like Wasoko. I've seen other clones of Wasoko in, the spare parts space, right? In other unique niche categories, right? I would say the trend that is moving there is because it's understanding that in how you deliver for your customer, it has to go deeper than just enabling goods to go from point A to point B. Right? And you need to really kind of build an ecosystem around that customer. And that ecosystem play, there's also expectation around the quality of that service, right? And so gone are the days where people would be happy to place an order on Jumia and wait 3-4 days to get their delivery, right? Someone places an order on your website, they're expecting their goods are going to arrive in the next few hours by the latest in the afternoon, right? And so in order to be able to enable that, I think the collaboration and looking at what are other platforms you can partner with. I'll give you a good example of when we were building Wasoko, we did everything in-house, right? I'll surprise you guys, we used to buy our own vehicles, hire our own mechanics, and actually fix everything in-house. When we launched Baki, all of our warehousing, last mile delivery is all outsourced to other parties who can do it much better than we can and much faster. And in fact, even cheaper, right? And so I think the bar in terms of expectations, in terms of the quality of the service that your customers are expecting, in my opinion, both B2B and B2C, requires you to now think more strategically about how do you integrate with other partners that can solve some of these key areas for your business.
Great. So I'm going to ask a question to Gerald, because I know he has to leave shortly. And thank you, everyone, for your insight. One thing that comes out clearly is the fact that when you're thinking about a customer, you don't think about the customer in isolation. There are so many other factors that you need to consider. Gerald, you mentioned the product team. You mentioned how you go to market. These are all things that need to be considered for a successful, first-day experience with the customer and thereafter. Another thing that's really important with customers is engagement. Looking at engagement, looking at how well the customer feels involved in the process. You mentioned that you build with your customers, so sometimes you're taking back feedback and then you build from scratch. So I'd like to ask, considering we're thinking about hitting a tech home run, which means you need to cover all the bases, what would you say is the most essential thing for a fintech to do to cover all the bases when the customer is the main point?
All right, thank you so much for that question. So for a B2B type business, there's just one very important thing, which is relationship, right? And that is why you hear about the concept of having key account managers working with different businesses and ensuring that those customers are happy, right? Because number one, you have to ensure that the customer has someone to go to. So if they're frustrated and if there's a downtime, especially which happens a lot in fintech, because it might not be your fault. There are a lot of players that are involved. You have the CBN, you have the NIBS, and I'm speaking about Nigeria now. All these different layers can be responsible for a disruption. But your customer doesn't know that, and they transfer that aggression to you. And one thing I've also realized is customers are not loyal. I don't know if Kenyan customers are loyal, but if they don't feel satisfied, they will move to that. You have that constant engagement. Like, for example, at Anchor, we have a weekly sit-down with a customer. We call it meet and greets, where we select 5 to 10 different customers every month, invite them for dinner, ensure that you're happy, have those conversations, get the feedback. Did you experience so much downtime? Are you happy with our services? Do you want something different? Does the commercial work for you? Do you want a new product launched? All those conversations and constantly staying in touch helps the customer believe that they are seen, believe that you care about their business, and above all, believe that there's a personal relationship. I'll give you an example. So we have a support team because, again, we are very big on APIs and the tech side of things. We have a support team on Slack where if you're having an issue, you chat with our customer support representatives and they're happy to support you. But I can tell you for free that these customers, especially the ones that I manage, will rather text me. In some instances, I'm like, okay, we have a support channel. They will support you faster, as opposed to me going back, and telling them, oh, text this guy is having an issue. They're like, no, please help us rectify it. And that's just how we are as human beings, right? We like to feel, we like to touch, we like to build those relationships, right? And that's, why it's very key to ensure that away from just onboarding a customer, you can build and sustain that relationship with them by always ensuring that you are top of mind for them, and you can support them at any point where they have any issues.
Thank you so much. I know you have to leave, but we'll proceed. So definitely relationship building is the name of the game, and it's one of the key factors to ensuring that you hit a home run. So I'd like to hear from Grace. What are your best practices for hitting a tech home run?
So before we build within our company, I need to understand the flow, like what problem am I actually solving? If I can't answer that question and I'm building blindly, then that is not even going to help the customer. I'm going to launch a product and with the customer. It's really important that you do surveys, first of all, before you even implement, even changing the whole UI interface of your app. It could be something that small, but you need to engage your customers to understand what do they want to see, how do they use this particular product, what do they want it to be featured inside there. Even it comes down to even understanding the cost. Would you prefer a zero deposit fee or a zero withdrawal fee? How would you like for us to position this? So that even as we're building and we are mapping the flows, I am mapping it from data directly from my customers. It could be existing customers and it could be potential customers that I'm mapping from. That's something that has been really key to our growth. In my background, when I did card issuance, it was now sitting with the customer. So like Gerald had mentioned, it's sitting to understand the use case. What are we solving? What are we building for? How is this thing going to be used? And then also, as you build, you have to think about scalability, because you're not just building it for one country. How can this thing be utilized in another country? So I could take it from Kenya and move it to Uganda and personalize it for that community. I could move it to Ghana, personalize it for that. I could move it to Nigeria and personalize it for that. Those are just a few of my few cents.
Yeah, I think Stella's ready to take on the question.
I just want to add on to the conversation that's currently ongoing about engaging customers. Obviously, as an organization, it's not advisable to blindly, sit in the boardroom and then decide this is what we're going to do this year. This is what we're going to do in Q1 or Q2 or Q3 or Q4 for our customers. It's important to involve customers in this conversation about what strategies will work best for them. What will enhance their satisfaction. And you mentioned different types of customers. We as well have different types of customers. We're mainly, we're B2B. And as I said earlier, our customers are the labs, private labs, hospital labs. In some markets in Africa or, in our global operations, we also transact or deal directly with the laboratories in our more in our bigger markets, but in majority of our African market, we deal, we work with distributors. So the distributor is the contact for the end customer. So in that case, we've got the lab as a customer, we have the distributor as a customer, and the patient as well is a customer, because we're doing all this to save patient lives. And I know sometimes it's odd to think of yourself as a customer when you're at the hospital, but you, as a patient, are enjoying services for that hospital, so you are a customer. So it's important to engage with all these different stakeholders to map out different customer journeys for them and implement strategies that work well for each of them. So I mentioned earlier, real-time customer satisfaction measurement. And I'll tell you a little story from 2013 when I got into the renewable energy space, and my boss at the time told me, Stella, we have to check our customer satisfaction. So what I want you to do, I want you to work with this, shall I call them a contractor? You're going to design a plastic sort of container, and then the plastic container is going to be divided into 3. 3 meaning we want to check promoters, passives. I don't know who knows about the NPS scale. Yeah, so we want to check the satisfaction of our customers. Who's passive, who's a promoter, who's a detractor. So we got, I didn't quite approve of this strategy, but he was insistent. And I also got, he asked me to get some balls designed, so red balls, green balls, and yellow or orange balls. So the idea was, when customers came into the service center, depending on how they rated our services, if they were unhappy, they take the red ball and put it in the red labeled plastic container. If they were not, if they were just, comme ci, comme ça, just in the middle, they take the yellow ball and put it in the middle container. And then the happy ones, would take a green ball, pick a green ball, and then put it in the relevant containers. So what would happen on the weekends? First of all, just to calculate, like how are you going to calculate your customer satisfaction scores, through this? It was very difficult, very manual, and not entirely accurate. And then during the weekends, our customers would come with their kids, because that's what you're going to do when you're running your errands on the weekend. You'll come with the kids. And what do the kids do? They see the red balls, the green balls, orange balls, they play with them and completely skew your customer satisfaction scores. So come Monday, we are at a loss. Are our customers satisfied or not? So now, we've got technology that, as I said earlier, allows us to integrate with the ERP, and you're able to measure customer satisfaction at the point where, like for us, equipment has been delivered to the customer. You're able to check, from a supply chain perspective, how long did we take? Were we okay on turnaround time? From a sales perspective, how was the interaction with our salesperson? And as I said earlier, it's easier for a customer to give feedback at the point where they're interacting with you. So real-time customer satisfaction measurement is so critical if you want to increase your response rate and if you want the truth from your customers on how their experience has been. From a CRM perspective, once a ticket has been raised on the system, the ticket has been closed. At that point, it triggers, an interaction with the customer. How satisfied are you with how we've managed your complaint or how we've managed your query? And because, the ticket has just been closed, the solution has just been provided to the customer, then it's easy, for the customer to respond. And again, it increases your response times and your response rate. And again, in terms of, say, like the platform we use, you're able to tell, because it's connected to the ERP, you're able to tell the value of your detractors. Because ideally, your unhappy customers are very likely to leave. In fact, a lot of them who don't complain will go to the competition. So you want to know, these ones who are complaining, how much is the value of the business that they brought to us? And you're able to check, like, if I don't sort this out, if I do not implement service recovery measures that are going to turn these detractors into promoters, then I'm bound to lose 2 million Kenya shillings, 3 million if these guys go away. So it's really amazing from that plastic container to how we are measuring voice of the customer, engaging our customers now, there's a world of difference thanks to technology.
Amen to that. And one of the industries that, when you're thinking about the customer, you're always like on your toes is definitely the beauty industry, because dissatisfaction almost results in like churn, and the churn never comes back. So what are your best practices for hitting a home run?
Thanks for the question, and absolutely, I think if you lose your customer trust, it's very, very difficult to win it back. And I think the first step in building customer trust is transparency and communication, right? And I think that cuts across the different functions of the business. I think first and foremost, as I was talking earlier around delivery, I'll just give a quick anecdote from the past week as we were cleaning up a lot of Black Friday backlog, was just being able to tell our customers, hey, here's the actual ETA on when we think you can get your package, right? Versus promising a customer because someone's angry that they're going to get their package in a few hours, knowing full well that you're not going to be able to deliver in a few hours. And so I think customers value that level of transparency and the open communication where we proactively tell them, hey, unfortunately, due to XYZ, we're not going to be able to meet the SLA that we'd initially given you. Here's the updated SLA. If you are proactively communicating, what we've seen in our business is that our customers are very happy with that. And where we do make mistakes, I think businesses that are very willing to own their mistakes and not just do token apologies. I'll give a good example of a client who ordered from us, and unfortunately, due to the high volume of orders, she got her package about 5 hours late. What we did in order to show her that we valued her as a customer was we actually got her a bouquet of flowers, chocolate, and we wrote a handwritten note to her, and we delivered that note to her. She appreciated it, right? And that customer is a customer who's, you know, ordering from us again this month, right? And so when you do make mistakes, I think showing genuine recognition of the mistake that you've made, owning it, and then being able to show that you value the customer, I think goes a long way. So transparency and communication, I think, is number one. I think number two is setting very, very clear expectations. Especially in the beauty space, a lot of times, unfortunately, someone hears about, you know, a serum, a cleanser, a moisturizer that they've been promised will solve all their problems, right? And they come and they buy that from your platform expecting that they're going to get the same results that they saw XYZ influencer advertising online. And the truth is, 9 times out of 10, that's not going to be the case, right? And so one of the things that we built into our journey is, one, also understanding what is your expectations with the products that you're buying. Have you spoken to an expert before buying these products? And what that helps us do is manage customer expectations around the efficacy of the products that they're buying versus the results that they're expecting. I think managing that upfront enables you to solve a lot of the headache that you get on the back end around people being very disappointed with the results that they're getting. And so I think expectations is number 2. And then I think number 3, and I think this is very true for e-commerce businesses even more broadly, is thinking about building community, right? And thinking about engaging with your customers beyond just the point of sale. I think too often we focus as the point of sale, as in that's the last piece, and once you've sold and you've received the money in your bank account, you forget about the customer, right? I think really thinking about how are you engaging with your customers beyond just the transaction, and viewing the transaction as just the beginning of that journey is really critical. For us, one of the things we did was we actually had a launch event. Even though we've been around for a few months now, we had what we called our Baki launch event in November, and we invited a number of our VIP clients to come and enjoy that event with us, right? And the point of that was for them to come and interact with the Baki team and network amongst themselves, but it also just showed them that there were ways in which they can engage with us beyond just with their money, right? And I think customers are starting to value and appreciate that. And so I think thinking about community and engagement beyond just the transaction, I think is another way to drive that long-term relationship building that you have with your customers.
Thanks so much. In the interest of time, I'd like to ask our lovely audience if they have any questions before we have any parting words. Any questions? Going once? It looks like we did a great job. No questions from the audience. So very quickly, in 15 seconds or less, tell us about, one experience dealing with a customer that really shaped your viewpoint of everything that you've shared right now. You've talked about trust, setting expectations, managing communities, and this question goes out to the whole panel. Stella, your viewpoint is so unique, and I love to hear. I love to hear the story on biotechnology. So in 15 seconds or less, go for it.
Wow. I think one thing that I learned a long time ago, it's from my days at Goldman, is under-promise and over-deliver, right? And I think for us, as I was just giving the example earlier, of the client who we brought the flowers to, right? Most of the time when a company drops the ball on meeting expectations, right, the easy thing to do as an e-commerce business is to send you an apology voucher and then move on, right? But being able to provide that extra touch goes a long way. So I think my takeaway for everyone would be under-promise and over-deliver.
So I think I'll need a little more than 15 seconds because I have a bit of an example. But I think for me, if as an organization, you want to create world-class customer experiences, you have to digitize. It's a key element of creating exemplary customer experiences. Somebody wise once said that convenience is the new customer experience currency. So as an organization, you have to make sure that you've looked at your processes, you've eliminated areas of inconvenience to the customer. You know, like now, I was thinking to myself today as I was getting ready to come, it's been almost 10 years since I actually entered a banking hall because I'm able to do everything, all my transactions online. You know, between the online platform and M-Pesa, I'm good. I never have to actually go into a banking hall. So it's really important that you digitize. It's also important for your employees because you want to decrease the manual processes that they have to go through, and that's why we implement systems like CRM systems. We say that your employees are the drivers of your customer experience as well. If you have unhappy employees, you're almost certain to have unhappy customers. So you need to digitize both for the customer and for the employee as well. Something unique about the biotech industry, and it's an initiative that's currently very big in the healthcare space, is something called antimicrobial stewardship. I don't know if anyone has heard of it. Yeah, so in layman's terms, basically, if you're not feeling well today and then you decide it's too much work to go to the hospital, I'm probably going to have to be there for hours facing queues and everything. It's expensive sometimes. So what do? You go across the road to the pharmacy and prescribe yourselves antibiotics. Okay, so you don't even know what you're treating. So, you know, the more you do this, the more your body becomes resistant to these antibiotics. So now, germs like bacteria, fungi, you know, this medication would ideally have killed that bacteria, but now, because you've been misusing the antibiotics, then they're not effective. And this actually leads to a lot of patient deaths. And you wouldn't believe that the number of patient deaths from antimicrobial resistance is higher than the number of deaths we experienced during COVID-19. So for us, how we are trying to fight this in the IVD space, or as bioMérieux, we have middleware that connects to our equipment. So it gets data from our equipment, which, remember, does diagnostics. It also pulls data from the lab information system, consolidates this data into analytics that can be used by clinicians to efficiently, you know, diagnose and prescribe the right medication for the patient. So, you know, for us, it's not just about customer experience. It's about patient experience and saving lives. Yeah, thanks.
My point of view is very different from her. But one thing I'll say that a friend of mine, Benji from Nala, usually says that we've only hit about 1% when it comes to the payments ecosystem, and just tapping into that and seeing how we can improve it as a continent. So one thing that I would really focus on, even as just as a key takeaway, would be customer satisfaction, building solutions that matter to the customer. Can we look at avenues of collaboration, whether, because you can't build everything by yourself, but somebody else could be building something that you could implement. And because right now a lot of the technology is on API based, we can easily access that. I'm looking forward to the day when open banking is going to become a thing, because Nigeria has figured it out. So as a country, we do need to figure it out. And the last and most important thing is security. I have this analogy that if a customer gives you the money, the least you can do is just ensure that it is safe. So what protocols are we putting in place? Right now, there's a rise in AI when it comes to fraud. How are we implementing that to find vulnerabilities before they actually happen, so that we are proactive instead of being reactive in solving for these solutions?
Fantastic, thanks so much. I think as customers in the room,
you've had a new appreciation of any product that you've purchased, any application that you use, because there's a whole team thinking about your day one experience. There's a whole team thinking about your next 100 days, your next year. There are people like the lovely panel we have today, thinking about how to make a product better, an experience better, to improve and move the needle in different industries. So we've heard about the beauty space, we've heard about biotechnology, we've heard about remittances, and we've heard about banking as a service. So all these different industries are all focused on ensuring that when you have more customers in the door and that there's more reassurance, reliability, safety, trust, community, then we're moving the needle towards just a better ecosystem as a whole. So thank you guys for your time and your wonderful insights, and thanks for being a great audience. That's the end of the session.
An even bigger round of applause for this team of panelists. Thank you so much, Alexandria Akena, consultant at Soko Insight, and your panel for that lovely discussion. Customer Grand Slam, hitting the tech home run, matters the customer, yeah? How to retain the customer, how to sustain the customer, yeah? Issues around personalization, integration of new products, customers' engagement, transparency, community engagement, and enhancing the user experience. These are the kind of discussions we're having throughout the Digital Week. Yes, we're going to have another discussion after this break we're going to have, and it's just getting better and better. So remember, even as we continue, because I can see some of you have been recording some of these sessions, as you share this information, do not forget to tag us and to tag our social media handles using the hashtag Digital and Technology Week. Our social media handles, once again, on X, formerly Twitter, at SMW Nairobi, on LinkedIn, Digital and Technology Week, on Instagram, for those of you on Instagram, digital_and_technology_week, and finally on Facebook, because I know many of us are there, Digital and Technology Week. Ladies and gentlemen, lunch is served. We are going to take a break for about 45 minutes or so. Yes, 45 minutes. So by 5 minutes past 2 p.m., we'll be back for us to move on to the next discussion. We're doing very well on time now, at least. Yes, there was a bit of a scare in the morning, but now we're back on track. So 45 minutes, we're back here, and we move to the next level. Sawa. Thank you so much. Let's take that break now. Another round of applause. Let me do that. Apologies. I did not mention where the lunch is. Yes? From where I'm standing now, lunch is being served to my left. Yeah? Upande huu wa kushoto. So kindly, you can walk there and have some lunch. Then we'll be back here after 45 minutes. Asanteni sana.
you.